No, today is going to be very basic. We're going to talk a little bit about what is selling premium. Let me back up. Today we're going to start off talking about what is an option contract, because I think that is a very fundamental thing that this group needs to understand with regards to selling premium. Then we're going to talk a little bit about selling premium as it is, what it looks like to sell premium, and why I choose to sell premium versus buy premium, and the benefits of doing so. And then lastly, we'll get into a little bit of the mechanics on how to sell a call or how to sell a put and what that really means. So we're not going to go into the deep dives of the kinds of plays that I play or anything like that. We're going to keep this very high level, just to give the guys a very fundamental understanding of what selling premium is.
Okay. Appreciate it. Look forward to it.
No problem. I hope you guys are here with questions because I am here to answer them. You guys are very lucky because my wife just left me for 7 weeks with my kids for to go overseas. So sucks for me, but good for you guys because now I have nothing better to do than to help answer you guys' questions and make you guys better traders. Since my kids aren't here to bother me anymore.
FaZe, I want to say thank you for all you're doing right now. It's kind of funny because one of these questions came up in selling premium in my seminar class in college, and like I
Mm-hmm.
just thought about the conversation we had, and like he tried arguing with me as if it wasn't a good idea to do, but then like with my explanations and everything that like you kind of mentioned and talked to me about, like he was
Mm-hmm.
like, oh, he goes, oh, it makes a lot more sense now. I totally see why you feel that way. So I just want to say thank you because I've learned a lot.
I'm glad to hear it, Eddie.
Well, I guess I just go to YouTube literally every time I come.
I'm sorry, I missed that, Turk. What was that?
Whoops, sorry, I didn't mean to.
All right, guys. Sorry, go ahead, Hazel. Good. Glad to hear it. Thank you, bud. All right, guys. I will start off with saying that if you're not able to see the screen, the stream, today's lecture is not going to be very dependent upon the stream. We're not going to be going over too much in depth around the mechanics until the end of the lecture today. So more than anything today, I want to start off by talking about what is selling premium. And to start to really understand what selling premium is, I really want to start off with some of the fundamentals, which is what is an option contract. Now, I know some of you guys have been here for some time. Others of you are new traders who have joined the Discord recently. So I apologize if this is more of a refresher for you than anything else. So bear with me while we get through some of this. So first off, let's talk about what is an option contract. An option contract is a derivative of a stock, right? What does it mean to buy an option? So whether you're buying a call or whether you're buying a put, what does that mean? Well, very simply, it means that you have the right to buy shares at the strike price that you selected. Now, that's very important to understand here because when we think about option trading, we're thinking about flipping premium. But that's not really what options are typically being utilized for. Options are typically used as a derivative to be able to exercise the right to purchase shares at the strike price that you have selected. Well, the opposite end of that spectrum is when you sell an option contract. So you can either choose to buy or a call or a put, and that gives you the right to purchase shares at the strike price that you've selected. When you sell an option contract, when you sell a call or when you sell a put, you are saying that you are taking on an obligation to either purchase or to sell shares at the strike price selected. Now, that's the reason why I sell premium. Okay? The reason why we receive a credit when we sell an option contract. I'm not sure who that is, guys, but if you guys could go on mute, please, I would appreciate that. Thank you. So when we sell an option contract, what we are doing is we are saying that, hey, I am willing to purchase your shares. So if I sell a put, I am saying that I am willing and I am taking on an obligation to purchase shares of that stock at the strike price I have selected. And because I'm signing over an obligation to do so, guys, please go on mute, please. I'm hearing an echo. Sorry about that. Because I am taking on that obligation, I get paid a credit. Now that credit is where my profits are, okay? What does it mean when I sell an option? Well, let's say I sold a workhorse put, a 20 strike put for 2 weeks from now, and I receive a credit of $1.50, meaning $150. That $150 is deposited into my account immediately after I sell that contract. Now, as soon as I receive that credit, I have already taken on the obligation that if workhorse is at 20 or below at expiration, I am willing to pay $2,000 for 100 shares of workhorse. And because I received $150 credit ahead of time, though I will be assigned shares at $20 a share, my break even actually comes out to about $18.50 a share because of the $150 I collected right up front. The benefit of doing this is that, and you guys hear me say it all the time, I let theta work for me. So out of curiosity, and feel free to say this in trade floor, how many times have you guys purchased an option contract, whether it be 1 week out, whether it be 1 month out, and you said the very next day, hey, or 3 days later, hey, the stock's not really moving. It's just going up 1 point, down 1 point, up 1 point, down 1 point. It's in this consolidation state. And every day my contract gets less and less. Well, that's because of theta, right? Every day theta is burning away on that contract. Well, that's my benefit, is because that sideways action, that premium burn, is where my profits are. Because that $150 I collected on workhorse, every day that premium is getting chewed away, whether the stock goes up, whether the stock stays flat, doesn't matter. Because that theta is working on that option contract for my benefit. And so I don't have to worry about whether or not anything's going to happen, because theta will take care of the work for me. And that's the biggest benefit that I have with selling premium. When we sell premium, we're not really worried about the profit target or what the price target is. How many times have you guys asked in trade floor when Cal or Tilio gives an alert and say, hey, what's our profit target on this? What's our price target? How much are we looking to make on this contract? And everybody stresses to you guys, your price target is when you see profits. Because the fact of the matter is, guys, that 80% of option contracts expire worthless at expiration. How often have you seen Tilio say, well, if this doesn't go my way, I'm okay letting this expire worthless? Well, guess who wins that battle? Every option seller that's out there. And here's the thing, guys. Retail traders are doing what we're doing here. They're buying the far out of the money contracts. They're buying these contracts that are 15, 20 strikes away with 1 week to expiration. And they're doing it based off of price action, hoping that they're going to make a quick 10, 15, 20% and move on. That's what retail traders do. But institutions don't trade like that, guys. Institutions buy shares, They sell calls, they sell puts, and they buy at the money and in the money options. Why do you think that is? It's because they're looking at the Greeks and they're using options as a true derivative of a stock. For these institutions, they could care less about money. They've got too much money as it is. Money is not an option for these guys. But what they are trying to do is they're trying to say, hey, I'm willing to buy 1,000 calls of Snap at $52, thinking when the stock price was at $51, knowing that the stock is going to go up. And they're willing to pay $400 a contract or $500 a contract because their delta is high and their theta is low. They're willing to sell 50 strike contracts on Snap because $5,000 in leverage means nothing to them. And they're going to collect $3 in credit. They don't care because that $3 in credit is just going to mean that they're going to get the stock at a better price point for their benefit when the stock goes down. And here's the best thing about selling premium, guys. That premium that you receive that brings your break even down, that also acts as your protection. So let's say at expiration, Workhorse is sitting at, say, $19. Remember what my break even was? It was $18.50, meaning on the day of expiration, even though my option contract is in the money, I can still find that I am profitable. I can still find that I'm still making $50 on that contract because my break even is still lower than where the current stock price is. And so even when something doesn't go my way, I can find myself in profitability. Now, many people have asked me, well, how much does it really take to start selling options? Well, truth be told, it's completely dependent upon you. I've heard some people say, well, you need $25,000 to start selling options. Yeah, that's nice. It allows you to get into more plays, which means more profitability. But that's not necessarily needed. I'll give you guys a perfect example. I started my Roth back in August of last year, and I traded a ETF known as DFEM, which is the ETF for the defense sector. I bought shares, and all I did was sell monthly calls. Then I started off, and I started jumping into TNA. With a $4,000 account, in 6 months, I turned that into $7,000. Meaning I almost had a 50% return, 100% return on that account in a matter of 6 months. So it's truly about how much you're willing to put in. But the biggest thing here is that the money that you put up, that's going to be leverage. And so it does take a little bit of cash to be able to do strategy. This is an advanced strategy. This is not a strategy that many people take because, you know, and you may have heard it plenty of times that when you sell an option, you have limited profitability, but unlimited risk. Well, that's not necessarily true because if I am willing to take on shares of that company and I truly believe in that company and I am selling puts, knowing that I'm willing to take on shares of that company at my desired price point, then is it really a loss for me? I'll just take on shares. And then the biggest part is that if I get assigned those shares by selling a put, I can then turn around. Let's take Workhorse as the example. I ended up getting assigned shares at the $20 strike price. My break even was $18.50 because of the $150 I collected initially. And now I can turn around and sell the 19 strike. I can sell the 20 strike call, meaning that if the stock is above 19 or 20 at expiration, those shares get taken away. They get assigned to someone else. And guess what? I collected a premium when I sold those calls. So my profitability isn't dependent on the movement of the stock. Yeah, it's dependent on it in the sense that, yeah, I have to ensure that the stock goes in the money if I don't want to hold those shares anymore. But my profitability isn't dependent on the upside or the downside of the stock. My profitability is dependent on the credits I receive. And you guys see it with me all the time. We typically will find stocks that are at a support level, that have high implied volatility, and we see. I'm sorry, somebody say something? Okay, no problem. So again, we look for stocks that are at support levels. We find stocks that have high implied volatility, and we ensure that we are at a certain level, sometimes a couple strikes below the support, if we don't want to take assignment, so that when the stock goes up, or even if it stays sideways, we see profitability. Perfect example of this is a 49 put I alerted a couple weeks ago on Snapchat. Now, I did this a little early. My entry was far earlier than I probably should have wanted because we saw Snap drop further and further down. I got into Snap when it was sitting around $53. I knew the support level was right around 50. Collected $2.60 in premium. Well, we saw Snap go all the way down to $47 or $48 before we saw a bounce. And then we had IV pump because we had Snapchat earnings coming up. And so for 3 weeks, that option stayed red. Even though we were above strike price, we stayed red. Earlier this week, we went and saw 50%. And you know why that is? That theta decay kicked in. And every day that that contract was sitting out there, that theta was getting higher and higher and higher. Started off with a 0.1 or 0.09 delta, or sorry, a 0.1 or a 0.09 theta. Yeah. Okay. Sorry about that, guys. We started off with a 0.09 or a 0.1 delta theta. Well, 2 weeks later, our theta was sitting somewhere around 0.40, meaning every day that passed by, that contract was decreasing by $40 per day. Yesterday, we saw 50% on that contract. Unlike many of you, I hope I held. And I held through earnings because guess what? Even today, on 250, I was still seeing a 0.8. It was worth about 0.8. And I didn't want to buy it back for $80. I said, no, I'm going to wait through earnings. I didn't think that Snapchat was going to come back down to $49. And it turns out I was right. I was lucky, but we had implied volatility crush. Now, tomorrow morning, I'll be able to close that contract out for 0.1, 0.09 or so. And I'll see a $240 or $250 profitability on that contract in just a matter of 3 weeks. This is no different than buying an option and swing trading. But rather than worrying about that contract getting deteriorating day by day and day by day and day by day, I want that to happen because that's how I make my profits. So when we sell options, we don't care about the price movement. We care whether or not the stock moves below our break-even price because that's where our protection is. And B, we want to make sure that theta works in our favor. Now, theta will work in your favor about half the time into your contract expiration. So if I open up a contract that's 30 days out, then I may not see too much theta decay that first 2 weeks. But the next 2 weeks, I'm going to start seeing that theta decay. And when that theta decay kicks in, it's going to be a heavy theta decay. The other part of this is delta. A delta, as you guys may understand, is how much a contract moves per 1 point in the stock's movement. Well, when I look at delta, I don't look at it from that perspective. I look at delta as the likelihood of an option contract going in the money. So when you see a contract that has a 0.3 delta, that means there's a 30% likelihood of going in the money. 30% likelihood of going in the money. Meaning there's a 70% probability I'm going to be profitable in this trade. So you tell me, do you want to be the guy who's on the side of buying premium and only has a 30% chance of seeing profitability? Or you want to be the guy who's on the opposite side and says, hey, I'll put up the leverage and I'd rather be seeing 70% profitability, because that's where I am. And that's where I'll sit, because that's where I see the potential of making more money. So with that said, that kind of gives you an idea of how to sell premium and the benefits of doing so. So let's take a look at some of my alerts, because I know many of you guys have had questions regarding the types of alerts that I give. So if we take a look at my tab, and I know I'm not showing this on the screen, but we're going to go back and we're going to scroll up to, let's see. Well, we're going to go to this alert that I gave just today. This is NNDM 12.5 put for March 19th for $1.71. What this is saying is that I am willing to sell a put at the 12.5 strike price on the stock NNDM with an expiration date of March 19th for $1.71 in credit, meaning $171. What does that mean, guys? Well, that means that I am willing to take on a commitment to buy shares, 100 shares of NNDM at a share price of $12.50, meaning I'm putting up about $1,250 in collateral. And for that, I receive about $171 in credit, meaning if I am assigned the shares here, my share price is going to be somewhere around what? $10.75 in that range or so. Now, I don't mind owning shares of NNDM at $10.75. That's completely fair for me. So that's what I'm doing when I'm putting out that alert. My expectation here is that the stock is either going to stay sideways or the stock is going to pump. Now, if it does move up, then that contract value is going to deteriorate. And as time progresses, that contract value is going to deteriorate even if it stays pretty range bound. And by March 19th expiration, as long as the stock is above 10.75, I will see profitability. Now, it doesn't mean I have to wait until expiration. I can choose to close this out. If we see a $4 pump on NNDM, I can close this out for whatever the option contract is worth at that point in time. But I know what my max profitability here is. I cannot make more than $171 on this contract. On this specific play, the maximum I will make is $171. At what point will I choose to make a decision to close that out? Well, my suggestion to most of you guys is that you close out plays at 50% profitability, especially if you can get 40 to 50% in the first week or two of your contract. You go ahead and close it out. It is also dependent on your risk tolerance, because if you're seeing that kind of profitability in the first couple of weeks, then the likelihood is that the stock can swing back against you as well. And if it does swing back against you, that puts you in a position where you let green turn to red. And now you're waiting longer. So just because theta is working for you doesn't mean that you should just wait to let the option go to expiration. Sometimes it's better to go ahead and take your profits and move on, because again, you are putting up leverage. You are committing cash to this play. This is why I have said time and time and time again in Trade Floor, in Selling Premium Chat, in Advanced Trade Floor, etc., that selling premium is no different than what Mario does with share swings. Because if I bought 100 shares of NNDM at $12.50, then it's no different than selling a put at NNDM at $12.50. Because I'm still committing that $1,250 in leverage to that play regardless. So it's very important to understand how you're using your leverage and the profit that you're going to take. My recommendation is always to find a play that is 30 to 45 days out, that has a high IV, and that has at least 10% profits per your, thanks, Hostile. Damn, Hostile, you screwed me up, man. So that has at least 10% profitability, or 10% profit versus the leverage you're utilizing. So let's take a guess here. For this NNDM 12.5 put, I collected $171 in credit. I put up $1,250. Ideally, the least I'm willing to take is $125 in credit for this. That's 10% of my leverage. This just happens to be close to about 13%. The 13%, in my opinion, is phenomenal credits. That's absolutely phenomenal. Because my goal is only to make 1% in leverage per week. That's my goal. You guys may, when you buy premium, you might be thinking, hey, I want to see 15 to 20 or 30% profits of this contract. My goal isn't that. I use about $30,000 in leverage, and my anticipation is that I want to make close to about 1% per week. 1% per week on $30,000 is roughly $300 per week. Meaning my goal is to make somewhere around $1,200 per month. Just so happens that I tend to make more than that. Now, that's because I typically find stocks that have a high IV, because there's a lot of extrinsic value attached to that contract. And I tend to find things that are at support, so that when we have a big pump on the stock, I can see 40 to 50 to 60% of profit on that contract in a very short amount of time, and I'm able to move on to the next play. Because that's what we want to do here, guys. There's no point in sticking around and holding onto a contract to juice all the premium out of it to 99% before you close it out. Trust me. You have a much, much, much better option to close the play out and move on. Or you can hop back into that play later. I've done that numerous times. I've seen a play that, I mentioned a Beyond Meat play a while back. It was a 115 put. We saw $80 profit back down to zero, back down to negative, back to 80, back to negative, back to 80, 3 or 4 times. And so I held that play, but I knew a few people who actually hopped in and out of that contract 3 or 4 times and made about $250 when I was only seeing negative. Because price action matters. Price action matters. When you see profitability, there's nothing wrong with taking that green and walking away. I typically won't, but that's because my risk tolerance is a little bit higher. And so I will always tell you guys, and I will always give out suggestions to you guys that, hey, we've got 15%. Take your profits, guys. Take your profits, guys. Take your profits, guys. Because I've seen it and it's happened to me before. But the benefit here, guys, is that when we sell premium, and you guys have heard me say it before, we don't take losses. And here's why we don't take losses. Is because even if you find yourself in the money and going to take a loss on an option that you have sold, you can always roll the contract out and you can collect more credits. So let's take that Workhorse example once again. Let's talk about Workhorse and say that at expiration, on the day of expiration, Workhorse is sitting at about $17.50, and I really don't want to take a assignment here. So what do? I buy my contract back for whatever price it's worth. It'll be worth somewhere around $100 at that point. Or sorry, it'll be worth somewhere around $250 since we collected $150 initially. And we're about 1 point out, deep in the money after our break even. So it'll be worth about $250. I'll buy that back and I'll sell the same strike, same 20 strike, or maybe I'll roll down to the 19 strike for a week out. And by doing so, I could be collecting maybe $15 in credit. I may not be collecting much, but I may be collecting just another $15 or $20 in credit by doing so. Now, what does that do? Now, my credit collected on Workhorse is $170. I have moved down one strike, so now if I'm assigned, it's going to be at the 19 strike. And I have more time for the play to play out. Maybe Workhorse just had some bad news come out right on the same day I was planning to close out my play. And it's just been downtrending. Well, now I've given my time, given more time for the play to play out the way that I want it to. And if I have to take assignment, I can now take assignment at a lower price. Excuse me, guys, one moment.
Oh, sprinting. Seconds.
Okay.
Elvis, you have 3 seconds left, but you're a sellout.
Guys, go on mute, please. Thank you. So now that we have an understanding of how options work, yes.
Face, can I ask you a question? I got here.
Let's hold off on questions for a little bit later. I'm sorry, I don't mean to interrupt you.
Is recorded. Sorry.
Yes, I believe the class is being recorded by House.
Okay. Thank you very much.
No problem. Sorry about that, guys. So with that said, now that we've kind of gotten an idea of how selling premium works, how we're collecting credits, and what we can do to prevent losses, let's go in and actually take a look at the mechanics of this. So now, this is the chart for Workhorse, and I'm on demand on Thinkorswim here on a on-demand account. And I want to do this just to give you guys an idea of what we do, okay? So let's say that Workhorse right now is sitting at $21.92. It's up 50 cents for the day, but it still looks like it's sitting at a decent support level, right? And for some reason, I have a feeling, and again, this isn't a play that I'm necessarily looking at, but I want to show you guys how we would go about doing this. So I have a feeling that Workhorse is about to pump. So what I would do is I would go out to the trade tab on Workhorse, and I would take a look at the option chain. And this is for January 5th. So let's say I want to take a look at the January 22nd. Now, on demand does not give you the implied volatility percentile for a specific contract per week. But typically on Thinkorswim, you would be able to see what the implied volatility for that week's contract is looking like. And ideally, we would want to be in a position where we are seeing IV of 50 to 80% or higher. Many times, especially on a stock like Workhorse, we find that our IV is in the range of 90 to 150%. Now, the higher the implied volatility is, the better it is for us because we're going to see better credits. We're going to see a better option premium for selling that put. So let's say January 22nd, which would be roughly about 3 weeks from the date of on demand, at the 21 strike, which is about 1 point away from being in the money, is giving me $1.58. Now, in order to see how to sell premium, typically when you're buying premium, you would click on the ask and you would pay $1.67 for this put. Well, we're not buying a put. We are selling the put. And so at the 21 strike, we are seeing on the bid of $1.58 in credits. Meaning at this point in time, if I were to sell this put, I am making a commitment that by January 22nd, if Workhorse is sitting at $21 or below, I will purchase 100 shares at $21, and I am committing $2,100 in leverage to this play. And I will receive $158 up front as soon as I sell to open the contract. So you guys see that I am selling the put. Now, when I sell to open a put, I am taking a bullish to a neutral position. This is the opposite of when you buy an option. When you buy a put, you want the stock to go down. When you sell a put, you want the stock to either go up or stay neutral. I don't care if it moves up and down right at 21 and 22, or right at 20 and 21. That's fine. I'm okay with that. Or sorry, at 21 and 22 is fine, because that sideways action is going to give me 6 cents of theta every day for the next 3 weeks. And this theta value is going to increase every day until we get closer to that expiration. The other thing that I would look at is the delta value. You see the delta value is giving me a 0.38, meaning that if the stock moves 2 points up, then my contract value is going to go up by roughly 76 cents, because that's my delta. My delta is 38. So for a 1 point move, I can anticipate a 38-cent move on my contract, meaning my $1.58 would be roughly worth $1.20 with a 1 point move up, meaning a $30 profit, plus my theta value. So let's say tomorrow, let's say I executed this contract today and I received $158, and tomorrow Workhorse went from $21.85 to $22.85. I would see that $39 increase in my delta, meaning 158 minus 38 is going to be $1.20 minus another 6 cents for the theta, meaning this contract is going to be worth almost $1.14 tomorrow, from 158 to $1.14, meaning roughly $40 in profit in a day, just by a 1 point move. And if not, then tomorrow, if the stock is still sitting at $21.83, I still see from $1.58 to $1.52, because I'm still getting that theta decay day over day. This is what I would do to sell to open a contract. So let's go ahead and we can actually go to the bid, which is $1.67, meaning more credit in my pocket. And I can confirm and send this order. And I've now sold this contract. Now let's just fast forward a little bit here. And we're going to go to, let's say, 3 o'clock. Guys, give me just one moment. My wife is giving me a call, and she's at the airport right now, so I apologize. My apologies, guys. My wife was just boarding the plane, and she'll be gone for the next 15 hours, at least on the flight to Doha. So wanted to make sure I'd talk to her and see the kids one more time before they took off. So my apologies. So here we are. It is now, we opened this contract roughly at about 11 o'clock in the morning on January 5th. And now it's been about 4 or 5 hours. And it's roughly 3:03 p.m. And we've seen that the stock has moved from 21.88 to now 22.26. And you see, when we initially opened this contract, it was at $1.67. And because of the movement on the stock of the delta, we're already seeing $20 in profitability. It's as simple as that. Now, let's say I move this out another, let's say a week. I'm going to move this out to a week from now at 3 p.m. And let's take a look at what that contract's going to be worth just a week later. I have no idea what the stock price is going to look like, guys. So this is going to be a surprise. So if the stock price is down, I apologize greatly. But let's take a look. I want to show you guys how Theta is going to work on this, and how a pump or a dump on the stock still isn't going to make a difference to us. And we're going to do this for a 1 week out, the next week out, and then closer to the expiration date to really show you. Look at that, guys. Look at this. We see the stock has now moved 3 points in a matter of a week. The value of this contract is only 33 cents, meaning in a 1 week hold where you never once worried about the stock price, you have made $133. In a 1 week hold, you have seen the stock move 3 points. And actually today is down, meaning if we had done this maybe yesterday, the day before on January 11th, we would see even more profitability. But today the stock is down by about 50 cents. And we were able to make $133 in a matter of a week. And I never lost a wink of sleep because every single day Theta was working in my favor. And I didn't have to worry about, oh, well, if we have a market sell-off, what's going to happen? Because I could have either chosen to roll my contract out, or my downside protection on this 21 put with a $1.67 trade price here was roughly around what, 1950, in that range or so. Actually a little bit lower than that, probably close to 1933 was my downside protection. And it just so happened Workhorse pumped up to $24.19. And so now what I can do is, when I'm seeing $133 in profitability, I can go ahead and buy to close this option. So what I'll do is I'll create a closing order. Now, you guys recall, we initially received a credit for this option. So when we go to close this, we are now going to pay a debit. So initially, when you buy premium, you pay a debit and you hope to receive a larger credit than what you initially paid. Here, I received a credit and I hope to pay a debit that is much less than the premium I received. And so I can go ahead and close this out at 34 cents by buying to close this option and sending the order. And now you guys have seen I have closed this option out in less than a week, although I had 3 weeks time. In 3 weeks, I could have left this open. But at this point, I was already seeing close to 75 or 80% profitability. Why should I keep this open? And so we were, in 1 week, are able to see $133 in profit. And we're able to close this out. So when I alert a 35 put on Palantir, or when I alert a 30 put on Laser, or when I alert a 32.5 put on Wells Fargo, what I'm saying is I am selling to open the 32.5 strike price on Wells Fargo for $1.50 in credit. And my downside protection is going to be at $31. And as long as Wells Fargo is at $31 at my expiration date, I am guaranteeing seeing profitability. And that's as simple as it is, guys. This is what institutional traders do. They don't sell far out of the money and hope to make a quick buck by selling the premium and flipping it. This is what they do. They say, hey, this is support. I'm okay owning shares below the support and getting shares at a discount. Now, I may only sell one contract, but these institutions are selling thousands of contracts, and they're receiving premium for it. Why do you think these guys never lose? Why do you think these guys aren't worried about retail investors? They want you to drive the stock prices up, guys. They're able to manipulate the market because this is how they trade. They have very specific risk parameters and are ensuring that they cannot lose because of A, the amount of premium they collect, and B, because of the amount of leverage they utilize. And the technical analysis that they have behind it. That's it, guys. Now, I'll be honest with you, many of these institutions, they're also doing a lot of credit spreads and debit spreads. We're not talking about that here. I will plan on having a lecture around credit spreads and debit spreads at some time in the future. In fact, my plan is, and this is something I'm working on with a couple of the people in the Discord, is to eventually be able to introduce something with regards to how to trade like an institutional investor. That's how these guys trade. I want to teach you guys how to win at all costs. I want to teach you guys that there is no way to lose when you play with options. When you treat options like a true derivative of the stock. Because that's what options are. They are synthetic stock. Stop treating it like just a couple of dollars and you're hoping that it's going to flip. Treat it like a derivative of stock. And when you treat it like that, I promise you, you'll see how easy it is to make money. Now, let me give you one more thing before we adjourn here. And I know we're going to encroach on Hostile's time, but Hostile has told me that it is okay. He wants me to take over his time if I need to, in order to be able to answer some of you guys' questions. So we will go into Q&A, but I want to go into one more thing for you guys, and that is many of you guys own shares of companies. You own shares in lots of 100. So let's say, and I'm just going to pick a number here. Let's say FuelCell. Okay, I'm going to look at FuelCell here. Let's say, let's take a look at the chart. Well, for whatever reason, I wouldn't do this usually. But let's say, for example, I want to own FuelCell, and I really want it at a lower price. But it's hitting a new high today. Maybe I should consider buying it. For whatever reason, you know, this is just a hypothetical example. Ideally, you'd probably want to buy it in this range at around $11.50. But for some reason, we're going to buy it here at $18.58. I'm going to go ahead and buy 100 shares just to show you the opposite side of this. And I just picked up 100 shares of FuelCell at $18.60. But I want to lower my break-even cost. So let's say I go out to February and I sell a $20 call on FuelCell. You see what the $20 call is giving me right now? The IV is extremely high on this. I know this from experience. I know it doesn't show here, but the IV on FuelCell is somewhere around 200%. The theta on this is 5 cents, and the delta on this is 54 cents. So for every 1 point, I'm going to see negative value on my contract. But what I can choose to do is I can go even further out. I can go to the 25 strike on FuelCell, which has a 39 delta, meaning 39 chance of going in the money, 39% chance of it going in the money by February. And I can go ahead and collect that premium in order to bring my cost of FuelCell down by $2.11. So I'm going to go ahead and execute this order. We're going to sell to open the 25 call on FuelCell, and we're going to receive $2.12. Now remember, this is all the way out till February 19th, and today is January 12th. So I'm just going to go ahead and execute this order. And I want to show you guys what happens, let's say 3 weeks later. Okay. So we're going to go out to, let's say January 26th. Again, I have no idea what the stock price is going to be, guys. I'm doing this just as a demo for you guys, just so that you guys have an understanding of how this works. So here's Fuel Cell. This is my 100 shares. Here's the call that I sold at 25. Has 24 days to expiration. I collected $2.12. And let's see. The stock is sitting at $21.81, 85 cents, 83 cents, excuse me. And we see that our contract is actually still profitable. 3 weeks later, we're still seeing $7 in gain. We're seeing $7 in profit here. Now, that means even though the stock is going up, theta has worked in our favor. 3 weeks later, theta has worked in our favor. And we're still seeing profitability. And as the stock continues to either go down or stay sideways, we're going to see profitability. Now, again, our expiration here is February 19th. So let's get closer to that February 19th expiration date. And it won't let me go further than the second. So I apologize, guys. We're going to go ahead and do the second. Let's just see where it stands. Again, theta is working in our favor here, right? So we know for a fact that as we get closer to the expiration date, theta is working against that contract. And we can also anticipate that the stock is going to pull back at some point, because when we purchased it, it was already hitting new highs, and now it's hitting even higher highs. So the expectation is that it should pull back, but it hasn't. It's actually up. On February 2nd, we're seeing that the stock is actually at $22, but because it's nowhere near our 25 strike, because theta is working on this contract, initially we were at this at 34 days, halfway through, we're seeing $16 in profitability. Now, if I could go out till the 19th of February, I would show you guys that even here, we would probably still see a good amount of profitability here. But again, the point here is that theta has worked in our favor, and we're still seeing $16 in profit. And again, I can go ahead and close this out at $1.99 right here, actually at $1.96, by buying to open this contract and guaranteeing myself almost $16 in profit on this, meaning now my share price is actually $16 less than what I initially had purchased it at, or it's just $16 more in my profits. It's in my pocket at this point. So you see how theta will work for us when we sell options. When you guys are complaining in trade floor about, oh, we're seeing such a red day, oh, my stock is moving sideways, oh, the stock is down. I'm not. And I'll give you another great example. Okay. Lee, and I'm going to pull this up on my phone here because I've got it on demand here, but Lee was a contract that Zabes and I both alerted. I'm not going to pick on Zabes here because we both saw the same thing. We actually both talked about DMs. He bought the 35 call, seeing a cup and handle with a potential falling wedge, and we were expecting a bounce. I saw the same thing. He bought the 35 call for $2.10 or $2.40, I believe. I sold a 30 put. Now, remember, when I have a sold put or a short put, I am taking a bullish to a neutral position. When we got into that play, I believe Lee was sitting somewhere around 32 or so. I think Mario alerted shares at this price as well. I sold the 30 put, meaning I had a $2 buffer before my strike, and I collected $2.50 of credit. Today, although me and Zabes alerted at the same time, my contract is worth $1.41, meaning I'm seeing $60 in profit on that play, whereas I'm in that Lee play on the buying premium side, and I think it's worth close to about 70 cents or 60 cents right now. You see how theta worked on that contract and made sure that it's worth so much less than where it is, whereas the same play, the same setup, worked for me, with theta, and every day we saw the sideways action, this up and down sideways movement, this premium burn, how I am able to see $60 in profitability. Again, I'm not trying to knock on Zaves. Again, we both saw the same kind of thing here. But the point here is that this is how selling options works. That premium burn that you see, that's working in my favor, guys. And 2 weeks later, here we are. I'm seeing profitability on that same trade because that sideways action is just destroying the premium on the contracts. We don't care about sideways action, guys. All we care about is collecting the premium and making our money and walking away. That's all we want to do. And that's what institutional traders are doing. And that's what I want to teach you guys, is that as a retail investor, hoping and praying that you're going to be able to flip premium, you can get lucky. But there's a reason why 90% of traders fail. And there's a reason why people like Tilio have been able to be successful after years of being able to trade. It's because they have learned that the market is very quick to take your profits away. But institutional traders don't give a damn because money is irrelevant to them. They've got plenty of it. What they want to see is consistent profitability. And that's what selling options will do. If you're looking for the lottery ticket that's going to give you a 5,000% gainer, buy premium. Buy premium, guys. But I guarantee you, for every one 5,000% gainer that you get, you have 50 that expired worthless or that you took huge losses on. I guarantee it. But me, I may not make as much as the guy who makes 5,000%. But I'm seeing 1 to 2% profit on my leverage every week. So if I'm using $30,000 and I see $300 of profit per week, that means $1,200 per month. And that's on 1%. Meaning at the end of the year, that's what? $15,000. Meaning I have just made 50% of my value. Now next year, I can now use 45,000. And what's 1% of 45,000? $450 a week. Meaning now I'm making $1,800 a month, which is roughly what, $21,000 a year? And I compound that money year over year over year over year. And you can easily see how you can turn 10 grand into 15, into 30, into 60, into 120, into 240, into 480, into 960. And guess what? 6 years later, you're a millionaire. Starting off with 10 grand. $10 grand to $1 million. This may not be fun. This may not be sexy. This may not be fast. Consistent. And it's guaranteed. Many of you guys work jobs. And you guys have money sitting in your bank accounts. Tell me, if you've got $10,000 sitting in your bank account, you're using that as, and you're using that as your emergency fund. That's one thing. I completely understand that. But if you've got 10 grand sitting in the account, you're just keeping in the bank account because, hell, I don't know what might happen, and I don't want to put my chances in the market. But you don't mind spending $500 a contract for a play that's far out of the money. And guys, I'm sorry to tell you, you're doing something wrong. Because I guarantee you that $10,000 that you've got sitting in the bank can be $1 million in just 6 years. 6 years. This strategy is deemed as difficult. This strategy is deemed as advanced. This strategy is made, institutions are tricking you, retail investors, to believe that selling options is hard. It's not doable. It's something that only the institutions can do, and that it's unlimited loss. Bullshit. Absolute bullshit. It's because they don't want you to know their secrets. They don't want you to know how easy it is to make money in the market. They want you to pump stocks like GME and BB and AMC. They want you to get into the bullshit so that they can short it and they can make their money. And they're shorting it by selling calls. They're shorting it by selling puts. This is what these guys do. And they're making, and I'll give you a perfect example of this, guys. Last Friday, and I didn't get into this play, and I really wish I had. Last Friday, GME was sitting at what, $275, and I looked at the 200 put on GME for a one-day expiration. Whoever that is, can you please go on mute?
Someone's calling for me.
Whoever that is, can you guys please go on mute? Thank you. Last Friday, the 200 put on GME, when GME was sitting at $270 for same-day expiration, was giving me $1,200 in credit just for holding the put with $20,000 of leverage. GME didn't even come close to that price. That price was literally $1,200 of free money. I guarantee you there were tons of institutions that took that play. Whoever that is, can you go on mute, please? Thank you. My point is that there's free money out there, guys. Don't think that there isn't. It costs money to make money, but that's how you make it. It's a lot easier than you may think. And I'm here to help you. I'm here to help teach you. I'm here to make it seem easy for you. My DMs are open to answer your questions. You guys are always thinking about going far out of the money. You could do an at-the-money debit spread. And rather than paying $500 for a contract that's far out of the money, you could pay 50 cents for a 1-point wide spread that expires in a week from now. You could pick up 10 of those contracts to 20% profitability and get out of it. But our mindset is set on the fact that I shouldn't be playing anything else other than calls and puts. Change your mindset. That's what I'm here for. I want to get you thinking like these institutions. I want you guys thinking how to make money. I don't want you hoping and praying for a stock to go one way or the other. I want you guys to expect that the stock movement doesn't matter. Because that's what the institutions do. Chamath, everybody saw the CNBC interview with Chamath talking about GME and how he made almost $500,000 in a matter of a day. Do you guys know how he did that? He bought in the money calls. When GME was sitting at $150, because the IV was so high, you guys were buying $300 and $350 and $400 calls, and you would see the stock move 50 points, and your contract's barely moving, or it's moved only 20 or 30 or $40. And some of you guys are excited. Yes, I'm making money, and that's good. I'm glad you guys are. Why do you think Chamath made as much money as he did? Because he bought deep in the money calls. His delta was so high that for every 1 point move, his contract was moving $100. Because he was treating it like an option, a stock derivative. Now, I know I'm getting off topic here. I know the whole point of this lecture was selling premium, but I really want to get it into you guys' head that options are a stock derivative. It's synthetic stock. And when you really ingrain that into your mindset, I promise you, it becomes very easy. When you start paying attention to the Greeks and understand what the Greeks do, know how delta, how theta, how vega, how gamma really work, and how the implied volatility really plays in to every option contract you look at, it becomes easy. But it takes time, it takes patience, it takes effort to understand how these things play into it. Price action is very important, but I don't look at price action as much as I look at the Greeks. And I guarantee you, any of the other analysts in here, they don't pay as much attention to the Greeks as I do. And the reason is very simple. I can calculate how much my stock or how much my short option is going to be worth at expiration, or what my price target on a stock is and what that contract value is going to be worth in a certain amount of time before I even get into the play. And it's not because the other guys don't take the Greeks into importance. It's because I know that what my price target needs to be, what the sideways action is going to lead to before I need to cut that contract, or before I need to think about rolling the contract. I know it right off the get-go. Many of the other analysts who are buying premium, they're thinking, okay, if it doesn't go my way and it breaks down below a certain point, I'll either average down or I'll let it go worthless because I'll make it back on the next play. And that's fine. There's nothing wrong with that. That is what retail investors do. That is what retail traders do. You guys see Tilio and Cal and Zabes and Shark, they are very successful at doing that. There's nothing wrong with going about that strategy. I'm not going to discourage you to go away from that strategy. But I want you to understand how institutions trade, and they don't trade with that strategy. They don't trade with that mindset. Their mindset is very different. And my goal is that every person who's in the server who wants to trade like an institutional trader has the skills, the ability, and the know-how to do so. Because it's not that hard. But the institutions have made it seem like it is impossible to trade like them. And that is not true. I know, guys, I'm sorry. I went on a little bit of a rant here. So I want to go ahead and open it up for questions for anybody who's interested or is curious, who wants to talk, has questions regarding selling premium and the alerts that I give and how I give them. Feel free to go ahead and ask. I'd like you to start, whoever does start, please start off with saying what your name is before answering asking your question.
Hey, Faze.
Hey, bud. What's your name?
It's Dennis.
Hey, Dennis. How are you, buddy?
Good. Can you just go over the NNDM play and your technical analysis and how you look at the Greeks on that play?
Sure. Now, for me, this was a riskier trade. But I mentioned that this is more of an assignment play because I really want shares of NNDM. So the delta here is 27.14, meaning that the likelihood of going in the money is around 27%. Likelihood of staying out of the money is about 63%. In addition, 73%. In addition, the theta here is about 2.88. Now, this is all the way out until March, so we have a lot of time here. Theta is really not going to take into effect here until we probably get to about March 1st. So theta is really not going to matter much. When I looked at this play initially, I was actually looking at it from in a channel, and I saw that it was on the bottom line of the channel. So I anticipate about a 1.5 point move on this. So if we do move about 1 to 1.5 points up from 1480 is, I think, right when I got into it, then we'll probably see about 1.3, 1.4 on the contract within the next couple of days. And if that's the case, then we'll probably see about $30 to $40 on this contract very quickly. And this is a contract that you can flip just for the premium, and wait for it to come back to the bottom line of the channel before getting back into it. So again, I apologize. I'm not really showing it on my screen because again, we're on demand here. So I won't be able to show what I'm doing on the actual chart.
Zero.
But I feel.
Stock.
Go ahead. Go ahead.
So, FaZe, this is Dennis again. So that channel is just under $14, and the top of the channel is what? The high, the $18?
No, if I remember correctly, okay, guys, I'm gonna give me just a moment here. Okay, you guys can still hear me, correct?
Yeah.
Perfect. Let me go back here. So the bottom of the channel here is right around 1480. The top of the channel here is right around 1660 or so is what I'm seeing. So that's the reason why I got into this play, is because I feel like
FaZe,
we're hitting yeah.
you're not sharing your screen.
Yeah, I know.
Oh,
I just turned off. I just turned off the stream. I'm in my live account. I don't want to share my live account details right now, so that's why I've turned off the screen.
okay.
Yeah. So right now, that's what I'm seeing. I will again when as we start doing more of these lectures, I will share my screen and kind of explain my reasoning for why I got into certain plays. This lecture today was more about just trying to understand the mechanics of selling premium. But just to give you an idea, my understanding or the way I was looking at this play is that we could see somewhere around 1475 or so is 1450 or so is the bottom of the channel, and the next leg up is around 1650. I don't know when we'll see that. Again, I mentioned this was a riskier play because I wanted to take assignment here. I am actually hoping that we do drop. I don't anticipate that we will. But if we do, then I don't mind taking on shares at 1075. Ideally, this is just the one that I alerted. I'm also in a 15 put for NNDM for March that I collected $3.60 for as well. So again, what I'm doing is I'm ensuring, well, I'm not ensuring, but I'm hoping that we stay below $15 at expiration. I get the assigned the shares for about $12, and then this $1.72 just helps to bring that cost basis down to about $10.50.
Got it. Thank you.
Absolutely. Next question.
Hey, Faz.
Yeah. What's your name, bud?
Yeah. Yeah. It's Siddiqui. Ayan Siddiqui.
Hey, Siddiqui.
Yeah. So my question is, so when you sell put, do you need a margin account or you can do it on a cash account too?
You can do this on a cash account. So when you have
Okay.
a cash account, what that means is that you need to have enough cash in your account as leverage for the play. So on this 12.5 put for NNDM, you need to have a minimum of $1,250 in your account that you will not be able to buy shares with or purchase any other option contracts with, because you have dedicated $1,250 to this play to ensure that if you are assigned, you have $1,250 to take assignment of the shares. When you have a margin account, the benefit of a margin account for all intents and purposes is to be able to do spreads. I use a margin account, but that's because I do a lot of spreads as well. In addition to selling premium, I do a lot of debit spreads, a lot of credit spreads. I do a lot of iron condors and some broken butterflies, but that's, again, besides the point here. If you're going to do just cash secure puts, covered calls, you do not need a margin account. You can do this on a cash account, but if you choose to do spreads later on in the future, you will need a margin account. My suggestion to everyone is to start off with a cash account on TD Ameritrade. You can open a margin account later on down the road with TD Ameritrade if you choose to do so. TD Ameritrade does allow you to do both. You can also do the same on Webull. Webull allows you the opportunity to do a cash account and a margin account.
Okay. So my next question is, so let's just say I have 100 shares of so and so company. Can I sell a put on it, or I'm only allowed to do call?
You can choose to do either or, but it's
Because
again dependent on your strategy here, right? So if you own 100 shares, are you saying that you want to own more? If you're willing to own more, then yeah, you sell puts. But if you want to bring down your cost basis, or you want to collect what I would call a weekly or a monthly dividend, you would sell calls.
Yes.
You would go far out of the money at a 0.2 or a 0.3 delta, where the likelihood of it going in the money is low, and you would collect credit. And
Okay.
my
So
recommendation
if
when you're
I'm
selling calls is to go with a lower or a shorter expiration than a longer expiration. When I sell puts, ideally I want more time because I want the play to play out the way that I want. But when I sell calls, I want to have a shorter time frame. I'm okay with collecting less credit if I'm going far out of the money.
Okay, so if I'm owning 100 shares of some company, I'm only allowed to collect credit for the calls, but not for the put. Because if when I'm trying to do put, that means I'm shorting that 100 shares.
Yes and no. So when you own 100 shares, you want to sell a call against it because you're using your 100 shares as leverage. Okay. So if your stock were to go in the money at expiration, your shares would be called away from you. Okay. That's your leverage here. When you're selling puts, you're using cash. Cash is your leverage. When you're selling a call, the stock is your leverage.
Okay. For example, if I sell a call and it's like 3 weeks, I'm selling it like 3 weeks of the time and it's in the money now, then they're still gonna, I still have to sell my shares?
Yeah.
Oh no.
So if your strike price goes in the money at expiration, you have two options. Either A, you can close it out for a loss if you don't want to lose your shares, or B, you can roll it out for a further strike. But if you roll it out and you still find yourself in the money, at some point, you're not going to receive credits and you're going to start paying debits. And when you get to that point where you're paying debits, now your cost basis is increasing just because you want to hold shares of something. So when you want to sell calls against something, again, you have to be prepared. When you sell premium, you have to be prepared for the worst case scenario. When I enter every play, I enter with the expectation that I am going to get assigned. Just like Tilio says, always know your risk before entering a play. When he alerts something and you pay $75 or $150 for a contract, you have to go in knowing that I'm going to lose all of this money. Same thing with me. When I go into a play, I am anticipating that either A, I'm going to pay for 100 shares at the stock price that I selected, or B, if I sold a call, that my 100 shares are going to be called away from me. So you have to be prepared for that.
Okay, the reason I asked this question because I own right now 100 shares of Solo, and I sold a premium. I think that was 21st January 2022, and now the Solo started going up, and it's in the money right now. So it's not in, but it's in the money. So they're not gonna call my.
That's okay. Not right now. Well,
okay.
Let me take that back. So you can get assigned prior to expiration. You need to know that ahead of time. When you sell shares, or when you sell calls, or when you sell puts, it could be for 3 weeks out. It could be for 3 months out. It could be for 3 years out. But if you are in the money, the market maker, if there is somebody out there who wants to exercise their call or their put, you may be selected. You could be randomly selected. That you will get called away. It can happen. It doesn't happen often, but it can happen. So right now you're in the money. It's quite possible that later on down the road we can go out of the money again and you'll be fine. But if we're deep in the money and somebody says, hey, I want to exercise my call contract, and it just so happens you get selected for that, your shares could be called away. I'm not saying it happens all the time, but it does happen. I had it happen to me recently with somebody I know who had 28 and a half calls on Wells Fargo. He had 3 contracts that he had sold. And although we had rolled the contract out and we were planning to roll it out again, he got assigned. And his shares got called away early, prior to the expiration date. So it can happen. It doesn't happen often, especially in a volatile market like this, but it can happen. So you need to be prepared for it when you make any decision.
Okay. Yeah, that's what I wanted to know, because now the solo, I'm pretty sure it's gonna go more up, and I just wanted to know if they're gonna, like, take away my shares or not.
I'd say the likelihood is low.
Okay.
Now, if you find yourself like super deep in the money, I think solo shouldn't have $9. Let's say you sold a $10 contract and tomorrow we run up to $20, or 3 months from now, solo is sitting at $40. Yeah, it's quite possible that you will get assigned early because somebody's going to want to go ahead and exercise that contract. Doesn't mean that it will happen, but it can.
Okay.
So, keep
Okay.
that in mind. I also believe that if you're that far out, I'm a little curious as to why you decided to choose that expiration date for 2022.
Yeah,
Especially,
I
I mean,
just
I don't.
yeah, I know. I just didn't had enough balance left in my account, and I needed to average down other stocks. So I collect the premium, and I use that premium to average down on the other ones. And like now I have enough money to get out of it, but it's unsettled right now. It's Webull. So Webull
Mhm.
doesn't let you use unsettled balance for
That's
options.
correct.
Yeah.
Correct.
So I'm gonna wait till 2 days. Like, it takes 2 days time to get settled. If in 2 days, like, I'm still in the
What
money, then
strike
I'm
did you
just gonna
select?
a $9.
$9 strike.
Yes.
I wouldn't cut it yet.
No.
Hostile's
Okay.
here. I'll let I'll let Hostile speak up a little bit. But if you got all the way out to Jan 22, I highly doubt that even if Solo pumps, and I think Stock Daddy said it today, like we could see Solo pump up to $14. I highly doubt that if we pump there, we won't pull back because there will be profit taking. And if you're planning on rolling the contract, or if you're planning on closing the contract, I would wait for the pullback before you go ahead and close it out. That's just my personal opinion. If you plan to close it, I think at this point, because you've got so much time on it, it makes more sense to wait and see how things play out. In worst case scenario, if you really are concerned about the stock, and you don't want to lose it, I would consider just buying another 100 shares and letting this go out, because I'm sure you collected a very nice premium for it.
My only concern is, like, is an EV company, and I used to have NIO shares when the price was like around 20 or something, and then I sold it way early. I didn't hold it. Now the NIO is like almost $60. So I feel like in the future,
Yeah, but you
right
never
now my
know.
average
You never
is
know.
yeah, I never know. Yeah,
So
that's
you
true.
can
Anything can
you don't
happen
know.
in the market.
Right. Don't get emotionally attached to any stock. I will tell you that. Hostile taught me that, actually. Don't get emotionally attached to any stock. If you really want to own something, then go ahead and buy more shares. Don't feel like, oh, I'm losing out because of this, that, and the third. If you made money, you made money. That's the bottom line
That's
here.
true.
Stocks isn't to hold on to something and hope and pray to God that, hey, I'm going to take this to the grave. Me and Hostile have had quite a few arguments around this, because I'm still holding Tesla stock, and he sold his Tesla stock a while ago, and he's like, well, I want it to dip again so I can buy it. And I'm like, I don't plan on selling mine because I'm really bullish on the company and I want for long-term growth. Well, you can't hold on to it forever. Yeah, you're right. I can't hold on to it forever. I shouldn't be emotionally attached, but there are certain companies that when you see growth potential, you want to hold on to it, but you can't be emotionally attached, especially when you're selling premium. You cannot be emotionally attached. Give me just one more second, guys. I'm so sorry.
Okay. Just answer this last question, then I'll be done. Okay.
Yeah,
For example, if I'm selling a put like you do, yeah. Do you want me to wait?
yes, please.
You said wait.
Hey, Siddiqui, sorry about that. Go ahead.
That's fine. So my question is, if I'm selling a put like you do, right? So if let's just say the stock price is $10, so how much cash I have to have in the account to sell that put? Let's say
The
for
stock price
the
is $10.
share
And
price
you have
is
$1,000.
I'm selling the $14 strike on a put. So I have to have like 1,000, or do I have to have 1,400 in the account?
1,400.
Okay,
So
so
you
the
need to
whatever
be
the
able to have you need to have enough leverage to buy 100 shares of the strike price you've selected. If the strike price you've selected is 25, you need to have 2,500. If the strike price you've selected is 50, you need to have 5,000. If the strike price you've selected is 75, you need to have 7,500, et cetera, et cetera, et cetera.
Yeah, that was my question. Thank you so much,
Perfect.
Fez.
Hey, Faze,
No problem.
This is Trey. I have a
Hey,
question.
go ahead. Hey, Trev, what's going on, buddy?
Yeah, I just wanted to see like how we could min max the premium that we receive through implied volatility. Like when the best time, I use the implied volatility study on TOS. It kind of shows up on my volume bar,
Mhm.
0 to 100%.
Mhm.
Is there what other tools you use to really like get, I guess when it's coming down fast and still has high volatility, is that the best time to do your
Ideally, the best time is if you're selling a call, it's when it's at resistance and you have a volatility of anything greater than 50%. I like volatility between 50 and 150%. You find that more often than you would think. But that's what I would suggest. If you're selling a put, then same thing. You want the volatility, the IV, to be somewhere around that 50 to 100% mark, and you want the stock to be at support. So NNDM, the March 19th IV is 153%. That's why I was able to collect more than 10% premium. If we look at Snapchat's premium for the IV for this week, I think it's sitting somewhere like 184%. Excuse me, 286%, because there was a 8-point move expected for this week.
Yeah, I was looking at the
That's,
NNDM and just
yeah.
trying to like see. It looked like the first was the best because it was like above $250 or $2.50 or whatever.
Mhm.
Right when it was kind of like leveling out right on the support. I drew the same line as you for the channel, and it looks like the IV is like slowly coming down. I guess when a stock is done from a pump, is that like the IV is just gonna slowly drain?
Yeah. You
Look
can,
like the
if
best.
we start seeing volume to come down, you'll see a drop in the volatility. But
Okay.
I'll be frank and honest. When you have 140%, unless the IV pumps up to like, I don't know, like 600%.
I don't know that one.
I don't know why Alexa's talking to me. Unless the IV pumps up to like 500% overnight, you're not going to see a big difference in your
Okay.
credit collected.
Okay, cool.
Now, if it goes from 140 to 160 or 170, there's not going to be that big of a change. If it goes from 140 to 500, yeah, you're going to see that your stock is barely moving. We did this with CCIV. I got into CCIV right when that pump happened initially from 13 to 16 or 13 to 18. And I saw very little price action because the IV pumped at that point in time. Now, since then, I was able to hold on to that contract for some time. It was a 15 put. We collected $270 in credit. I was able to close that put out 2 weeks later, just this week, for I think 25 cents or so. So we actually made $235 on that play. And I could have held it to expiration, but there's no point in holding it anymore for another 2 weeks to collect another $25. It's pointless at that point.
I appreciate it. Thank you.
Yep, no problem.
Hey, what's up? This is Josh.
Hey, Josh, how are you, buddy?
I'm good. I was just curious about what kind of debit spreads do you prefer? Like, do you prefer far out expiration with one-to-one type of widths, or because like you said that you would rather prefer stacking up on like a 1-1 ratio width and like buy like 10 contracts?
Mm-hmm. So I'll give you one that I was looking at that I didn't enter on Friday. I was hoping for a break of 60.5 to get into the 61-62 debit spread on NEO.
Okay.
I was looking at the February 5th expiration, and I was hoping to pay somewhere around 35 cents. And my expectation was I was going to pick up about 5 contracts, and if it pulled back, I was going to scale into 10. Now that's a 1 point wide spread with a maximum profit of $70. But my expectation wasn't that I was going to hold this on forever. I was probably just going to hold this for 2 to 3 days, try to get that pump from 60.5 to 61.5, and I would have seen probably about 40% pump on my contracts, and I would have been able to get out. So these are the kinds of spreads that I look at. You don't necessarily need to go far out of the money, 10 point wide spread, just so you can see the maximum profits. You don't have to think that way. You can think, hey, I just need a 1 point or a 2 point or a 3 point wide spread, and I just want to see that 2 point movement in the contract to get myself a solid 30%. And I can be right at the money. I don't have to be 10 strikes or 15 strikes out of the money in order to get where I need to be.
Cool.
Does that make sense?
Yeah.
Does that help to answer your question?
Yeah, for sure. Thank you. I appreciate it.
Absolutely.
Hi, this is Victor.
Hey, Victor, how are you, buddy?
Good, buddy. So I just have a questions. I have been selling premium, and there's a couple times I get caught, selling the premium too low. And I just wanted to know at what point should you roll over the premium?
So it depends. If I sold a put and I got caught in a downtrend, and I'm getting closer to expiration, and I'm not seeing that pattern change in my direction, then what I'll do is I'll wait for that a slight pump. It doesn't have to be a major pump, but even just slight 1 or 2 point move up, and I'll roll my contract. Because if you're selling a put, you're going to get a better credit on the roll if you see it moving upwards. Same thing on a call. You can find yourself in a position where you can be in a short call, see the stock moving up, and you're getting closer to your strike price, and you don't want to lose your shares. So what you do is you wait for the slight pullback, you go ahead and roll your contract because that's where you're getting the most credits on your call, and you move on.
Okay, so what about like time until expiration? So like maybe a couple of days before expiration?
I think it depends. So if you've got, let's say a call, let's say you got a call that's 3 weeks to expiration, the option has gone completely against you. You're in the money at this point, or you're just at the money. Theta is not really working for you at this point. You see a slight pullback about a week and a half. I would say probably about a week prior to expiration is when you start thinking, okay, maybe now I need to consider rolling this. I think that's the ideal time frame because theta has really taken effect onto the contract, and that's when you start looking for that pump or that dump on the stock, depending on whether it's a call or a put, to be able to roll your contract.
Okay, all right, sounds good. Thank you, buddy.
No problem, Victor.
Hey, FaZe.
Hey, what's up, buddy? Who's this?
My name is Xavier. I'm totally new to this selling calls and puts. And a quick question. So when you sell a call, you want the stock to go down, right? In order for the value of the call to go down, and then you buy it back to keep the difference, right?
Correct.
All right. So instead of selling a call, why can't you just buy a put? Since aren't they the same thing technically?
Yeah, it is. It is. You're absolutely right.
All right.
But again,
So
what if the stock doesn't go down? What if You buy this, again, change the mentality here. It's not about I want the stock to go up or I want the stock to go down. It's about collecting credit. That's what this is about. This isn't about taking a look at the stock price. It's about collecting credit. It's about making money on shares that you currently own. If you own Apple, the dividend is shit. The only benefit of owning Apple is that it has long-term growth, right? Long-term growth potential is fantastic for us. But from an investor standpoint, I get nothing for owning Apple. All that is paper profits, gains in my account. But until I close that out, I don't have gains. Today, Apple's sitting at 135. What if it drops down to $90 tomorrow? Am I in profitability? Of course not. But I own those shares, and I'm owning those shares for the long term. So why not sell a 150 call that's far out of the money and even collect $10 a week for only 100 shares of Apple? That's still bringing my cost basis down. That's still bringing money into my pocket. It's not necessarily about profitability or saying, hey, I want to buy puts because I think the stock is going down. You can do that. But if you're wrong and theta eats away, that's a loss of money anyway. And all you're doing is taking a bet that the stock is going up or going to go down. I want to collect premium on my stock because I want to collect a dividend. I want to bring my cost basis down. This allows me to do that. And it adds money into my account every single week. So again, this is where that change of mindset is important. This is where we're talking about getting away from this retail mindset of, I think this is going to go up, I think this is going to go down, and just flipping premium to saying, I don't give a damn what the stock does. I just want to make money. And that's what I'm trying to. Go ahead. Oh, I think it's like. So I was actually looking at this one earlier today. I didn't get into it because I wasn't trading, but so I was looking at earlier the February 12th 145 call, which is giving me 38 cents in credit. The theta decay on that for next week is $7. Meaning, what is that? Like 12% decay per day on that contract? And the delta is 0.12. The likelihood of it going in the money is 12%. 88% likelihood of me winning. And guess what? That $38 brings my contract value or my share price on Apple down. And I want to get to the point where I own 100 shares of Apple and they're free money. It's all free because I paid it off by collecting premium on it. This is, I say this all the time in the server. I don't buy premium because I like collecting rent. I buy shares of a company just like I would buy a house, right? I bought a rental property and I buy this rental property for $50,000. Well, that rental property doesn't do anything for me sitting there. Yeah, it's going to appreciate in value over time so that 10 years from now, that property that I paid $100,000 for is now worth $200,000. But if it's just sitting there, it's not doing me any benefit. So what do? I rent it out. That's what we're doing here. We're just collecting rent on our property. We're collecting credit on the shares that we own. That's all we're doing here, guys. Keep it in mind like that. That's how the wealthy get wealthier. The rich get richer because they buy rental properties and they make money on their assets. That's what we're doing. We're buying an asset and we're collecting rent on that asset as that asset grows in value. Does that help to answer your question, buddy?
Yes, it does.
I'm sorry, guys. I get a little excited about this. I'm a little bit of a geek when it comes to it, but you guys don't understand. Like, I want to get you guys hyped up on this because, I mean, Can you just imagine somebody telling you that I can turn 10 grand into $1 million for you in 6 freaking years? 10 grand. Our stimulus checks or just the stimulus checks that you're getting over this past year, it's going to be worth what, 12, 6, 18, and potentially another 14. That's what, $4,000. $4,000 in free money that you could turn and flip just by selling premium. Tell me one goddamn rental property that you can buy for $4 grand that will yield you 50% year over year. Not one of you can. Now, I can't go out and buy a $100,000 property that's going to get me $700 in rent a month. And I'm not even telling you that you need that much money. You can start off with $5,000. I started off with $4 and I turned it into $7 grand, actually $7,400 in a matter of 6 months, guys. Over 100% return just by selling premium. And I did it in a Roth, meaning I don't pay taxes on it. Meaning over time, that money is going to turn into $1 million in the matter of the next 6, 7 years. And you think I'm going to have to work a job after that? Many of you guys are 22, 23, 24 years old. Some of you even younger. Just imagine the amount of wealth you can accumulate. This is how generational wealth is created. We hear it all the time on the news. Oh, well, the poverty-stricken people don't have the opportunity to create generational wealth. It's because the institutional media has made it so that you can't do it. This is a trick of the trade that people don't teach you, and they tell you you can't. It's too hard. Bullshit. Bullshit.
I like you guys.
Man, it blew my fucking mind.
Like, I
And
feel like
that's what I want to
FaZe is literally like Anton Krill. I watched that video and it like blew my mind. You said everything exactly like he did because he teaches institutional teaching. It's fucking awesome.
That's the point here, guys. And trust me, I have 2 buddies of mine who are working at hedge firms right now. These guys are managing $2.5 million. Do you know what they trade? I kid you not. You're gonna laugh when you hear this. They make one trade on a Monday morning or a Friday afternoon, and then they sit on their ass and they laugh all week long. One fucking trade. Excuse my language. One trade on 100 contracts of TNA or 100 contracts of TQQQ. That's it. And that $2.5 million, they yield anywhere between 500 to 750K a year. And you know why the hedge firms hired them? It wasn't because they're really smart. I know these guys. They're smart, but they're not really fucking smart. They're not Einsteins by any means. The reason why they hired them is because they consistently yield 1 to 2% profits per week. Hedge firms don't care about profits because profits are meaningless. They want to see consistency. Winning one trade and losing another leads you to net negative or net zero. But consistency leads to compounding growth, which leads to future generations of wealth.
I have another
James,
question.
is that where you got the TNA trade from your hedge
I
fund
did.
guys?
Yep.
Yeah.
That's exactly where I got it from.
And are they still playing it?
Oh, they play it every week.
Yeah, every week. Yeah.
They play it every week.
And they're selling premium.
One guy I know, he has 1,000 contracts of TNA. He's got 10,000 shares of TNA, and all he does is does covered calls on his TNA contracts week over week. That's all he does, and he collects 1% per week. That's it. That's it. Literally, I'm not kidding. These guys, they're in the office. These guys are in New York, in Jersey, actually. They're in the office, and they tell me that they've got people all around them on their trade desk who are frantically looking at charts, who are doing this, who are doing that, who are doing this. And these guys, they're literally sitting on their ass all day long, 4 days out of the week, because all they do is that one trade. Can they make more? Yeah, they can. Do they need to? No. Are they comfortable making $500,000 a year? Yeah, they are. Because it's low risk. It's easy money. That's what I want to teach you guys. Easy money. It's easy money. Like I don't know how to make it easier for you. You don't see me complain and cry about my positions all day long when we see a red day or a green day. I don't care. Doesn't matter to me. Red day, green day. When I have a red day, I laugh. I turn off my monitor and I say, okay, fuck it. Or I look at a red day and I say, yes, good day to sell puts. Good day to sell puts. Let's do it. Don't cry. I don't look at all the red positions in my portfolio and say, oh my God, I'm so screwed. I get excited. Red days are a blessing. Because that's where I make more money. Green days, it's harder to make money when you sell options. Red days, I make a lot of money. Meanwhile, trade floor is going crazy. Oh my God, I'm losing so much money. And most of you guys don't get hedged. You guys aren't staying hedged. And so a lot of this can be prevented. You
How
guys
many
want to buy
trades are you in
premium.
usually at once?
I'm sorry?
How many trades are you in usually at once?
Anywhere between 5 and 7.
Thanks.
I don't recommend that for everybody. I have a larger portfolio than most. Again, I'm only playing with about 30K. But you know, I don't over leverage myself. I keep myself at that $30,000 mark. Try to keep at least $8,000 to $10,000 in cash, and I'll stay in about 5 to 7 positions. Some of those are positions that I am just kind of letting premium burn out on it. For example, RKT. That was a play that we could have gotten out a long time ago, and I got greedy. I'm not gonna lie. This is a big problem of mine. We opened the position up for 165, I think 3 weeks ago. It got down to like, when Rocket went up to $25, it got down to like 0.35. I was like, no, I want 0.3. And Hostile laughed at me. I know he's laughing. I know. You because it went up to like 0.75 or 0.8. And I'm like, shit. And I'm holding it. And I just closed it out today for like 0.25 or something like that. I mean, when you sell premium, you realize how easy it is to juice money out of things. You get greedy. And this is the time you can be greedy. I don't recommend it. I tell people all the time, take your profits. Don't be like me. This is one of the things that I'm really working on right now is not being greedy. And me and Hostile are always DMing each other because I'm like, yo, I see this play and I'm in this play and I'm up 80%. And he'll look at my, why are you still holding this? Because I don't want to give away $40. I just made $500 on this, but I don't want to give away $40. And he gets pissed off at me like, what the hell is wrong with you? For $40, you're going to let risk ride? Yeah, you're right. And then I'll close my position because I get greedy. But it's so easy to make money this way. It is so. I don't know how to make it. You know, I'm getting frustrated here, and there's nobody to get frustrated on. But I get frustrated because people complain about how trading is so difficult. But it's not. 90% of traders should not fail. There's no reason for traders to fail. None.
I think the frustration comes from the inverse narrative because people are taught wrong.
Yeah,
on
exactly.
purpose to make money.
Exactly.
I get frustrated.
Institutions teach you that the only way to make money is to buy options. Or if you really want long-term growth, you buy a stock and you hold it for the next 25 years, and you hope and pray that it does have exponential growth. And I'm not saying that there's anything wrong with long-term investing, but buy and hold. There's nothing wrong with that. I am a true believer. Screw you. Me and Hassel agree about this all the time. I preach the fact that when you make profits, you put that profit into a long-term stock to really grow long-term growth. That's how I believe you get long-term growth. Hassel is completely opposite from me. He believes that you buy shares, you see shares at a good price, and you're making great money. You get out of those, you get your cash, and then you can buy it back on the dip. That's absolutely true. You can do that too. Me personally, I don't see Tesla going back to $300, and I got shares at $300. Could I sell it at $900 and buy it back at $800? Yeah, I could, but why? Do I need the cash?
Tesla does not come down.
Screw you, man.
Apple's a really good example.
Apple
chops a lot.
Apple. Now, again, I've had Apple for a long time, and I buy the dips on Apple. I've got many shares. I've got 200 shares of Apple, and the cost basis is roughly around $85. Do I think Apple is going to come back to $85? Probably not. Am I making great profits if I sell right now? Absolutely. Will Apple dip back down to, if I sold it at 145, will it probably dip back down to 130? Quite possibly. But again, why do I need to do that? If I can sell enough premium on Apple to make those shares free, if you're just long-term investing and holding shares that aren't doing you any benefit, it's a different story. But if you are using that money to as leverage to make more, then there's nothing wrong with that. We're collecting our rent.
Face.
Collect your rent. Yeah, go for it.
Another question. Can you elaborate a little bit more on picking the length of time? Like you said, like a month, like 30 days or more, right? Is that normally what you mess with?
I don't. That is what I suggest, but that is not what I do.
But like weeklies is okay too. Like I know it's less money, but you could like even mess with. I just don't want to have like my capital held up for like a super long time.
I would do at least 2 weeks.
Okay.
I don't do the only weekly I do is TNA. But outside of that, I typically do 2 weeks.
Okay.
2 to 3 weeks is on average for me.
Okay.
Yeah, because a play can go against you too. Which adds more downside protection.
Okay, so beginner like a month or more. Okay.
Absolutely.
Yeah, you can just take your profit and like do it again.
Absolutely. Absolutely true. Again, I tend to take a little bit more risk. I am more aggressive with my plays. The plays that I alert, I'll say are medium risk or medium aggressive. Because I don't put plays out there that are shorter than roughly around 3 weeks is the average that I alert. Except TNA. TNA is the one that I do every single week over week. And I always tell people prepare for assignment because we never know what's going to happen.
Faz,
Yes.
can you like post a few tickers like which has like consistency like an Apple, but like a lower price, which we can afford by selling premiums, like let's say $8 or $10 per share tickers, but has like more consistency, like
I don't look at shares that I don't look at tickers that are $8 or $10. To be honest with you.
Okay, it's like because we
NNDM.
can't afford, we can't afford TNA.
Yeah.
What like we can't afford TNA or
NNDM.
NNDM.
Look, yeah, NNDM is a good one. I tell people to look. If you want to start off in this, you need to start off with a minimum of $5,000. Okay.
Okay.
$5,000 is the minimum you should have, because you can look at stocks that are under $50. Okay. You shouldn't be. Don't look at the $5 and $10 and $15 stocks, because a lot of those are pump and dumps. Okay. You want to have stocks that have some solid base to them. Some good fundamentals to them. Yeah, 20 to 50 is a good range. Workhorse, Rocket, Palantir, Snapchat, Neo. It's a little bit on the high end, but Ride, Laser. What are the other ones that we've played? Hostile, Wells Fargo, Bank of America. Those tend to have lower premiums, but they're a lot more conservative plays and do generate good. CRSR, and then some of these spec plays that have a lot of hype. CCIV has a lot of hype behind it. I sold an April 22.5 put when we were sitting at 22.5, anticipating a bigger move. I got $8 in credit for April, so it was 2 months out. $8 in credit. We pumped up to $35. I saw like $350 in profit. I didn't take it because I'm a greedy son of a gun, but it was there, and I don't anticipate seeing CCIV go down to 22.5. So I'll probably hold this out till mid-March, at least until I get 50 to 60%. Because I don't want to have to pay out another $300 once it's in my pocket. 22. Imagine that you pay you use $2,250 in leverage, and you collected $800, bro. That's 35%. That's stupendous. I mean, that is extraordinary credit.
Yeah.
Exactly.
Yeah, I recently started doing that. Before I used to like look at it as like, okay, I need to make $200 from this, but I never really care about the percentage. But I recently started doing the percentage wise, which actually paying me more, I think, than the dollars. Well, like
So Siddiqui, I'll give you a perfect example of why I failed when I bought premium. Okay, and this is part of me that I've been an entrepreneur my entire life. I would buy a contract for $50, and I would see 20% profit. What's 20% of $50? $10.
$10.
$10. And I'd be like, damn, I spent $50 to make $10. Now I'm gonna hold this. Guess what would happen? It would reverse. And I guarantee you, I'm talking about my experience. I guarantee you, half of you people who are listening to me are thinking the same thing that I just said. Spent $50 to make $10? 10 freaking bucks. Nah, man, I gotta hold this. I gotta make at least 50%. I gotta make $25. And it would reverse.
Yeah,
and
I did the same thing for over a year. Yep, I did the same thing for over a year. From like this January, like the January 1st, I decided I'm not gonna do anything. I'm gonna change my, like you said, mindset. I'm gonna go with the percentage wise. Doesn't matter if it's $10, $20. I'm gonna keep my percentage between 10% to 20%. That's all I
Yeah.
want. Yeah.
It's all
Okay.
about mindset, guys.
Yeah. And one more thing I wanted to know, like, can you, like, like I work full time. I work like 10 hours a day. So I don't really get time whenever, like, you put the alerts on. I don't really look at it right away. So can you be like able to give us like a watch list on Sundays or like
I,
early Monday
I'll be honest with
mornings?
you. I'll be honest with you. I work a full time job as well.
Oh,
I
okay.
I don't know when I see a ticker that kind of hits my support level. It alerts me. I don't make a watch list. I have about 50 tickers to 60 tickers that I look at week over week, and I just have alerts out. And when it hits that alert, then I say, "Oh, I like this," and I take a look at the premiums and I alert it in the Discord. My suggestion: if you want to sell premium like I sell premium, 20,
Yeah.
50, 50, 20 and 30 and $40 on a premium contract doesn't make a difference, to be frank and honest.
Mm.
And here's the thing. It's happened to me far too many times where greed gets the best of me. On NNDM, I actually saw this at 187 this morning. So what did I do? I put an order in for $2, and it went to 161. So for $14, I lost $20 of profit. So what did I in one day?
In one day.
So what did I do? I said, you know what? I put a new limit order in at 175, and I went and checked it again later. It was at 171. I said, I'm not going to bitch and cry about $4. And I just took it at 171. If it drops down to 170 a few days, or 180 tomorrow, that's fine. Is $9 really going to make or break me? No, because I'm collecting data anyway. So again,
Okay.
changing your mindset.
Yeah, it's like, I don't know. I'm pretty sure people are like me, are in this, like, so like my job is like, operation. I'm operation manager. So my work, like I can never tell when I'm going to get free time or when I'm going to be busy. Yeah. So can you like give us the tickers you watch no matter what every week and what alerts you set it that, like, on those tickers? So like, you get the alert, we also get.
I just told you exactly what the main tickers that I've been looking at just the past 2 weeks. I don't look at a lot. Literally, these 10 tickers off the top of my head, they're the ones that are fresh in my mind because that's what I looked at. Laser. Yeah, good.
Okay.
You'll see. I promise you. I played Snapchat in my channel probably about 6 times over the past 6 weeks. Hostile.
Yeah, I see like you do TNA, PLTR a lot. Yeah.
Yeah, I don't look at a lot of different tickers.
You're off
And
work
it's
too.
not
You
because
gotta
other
explore.
tickers. I'm sorry.
I was just saying when he's off work, he can just go through a bunch of tickers and just explore.
Yeah, that's exactly what I do. I mean, I just like you, Siddiqui. I work in IT. I work in vendor management. I'm in meetings 90% of my day. I don't have time
Same
to
thing,
sit there
yeah.
and watch the market all day long. I just don't have the time. So, and that. Mhm.
Wow.
I can't go trade.
Yeah.
Yep. You let it play out. QS. QS was a play that we were down on for a while. Now we're profitable. Snapchat. Yeah, a week. Snapchat is the most beautiful one that I wanted to bring up because Snapchat I got so many DMs complaining about, oh my God, we're losing $150 or $250 on this play. And we were. And not once did I complain. Not once did I say, oh my God, I'm in trouble. Not once. Because I knew. Exactly. We take like $50. Yeah, something like that. I mean, guys, let Theta do the work for you. Why complain and stress and worry yourself and then go to bed waking up at 4 o'clock in the morning to check your phone in the middle of the night? Oh, is the market up? Is the market down? Oh, what's going to happen to my positions? Theta does everything for you.
Oh yeah, I know that stress. I know that stress. Like I used to wake up 5 o'clock, 6 o'clock in the morning just to see. Like this was like a year ago. Yeah. Yep, that's true. Yeah, that
Think about
yeah,
it
that
this way.
was
You
that
work your job. You work your job. And again, I want you to really think about this from a corporate perspective, right? The major corporations, the big banks, hire 1,000 people and pay them $75,000 a year. Meanwhile, they're charging their clients umpteens amount and making hand over fist while you work 75K or for 75K a year. That's what we're doing here. Is we're the big corporation right now because we have the leverage and we sell the premium to the guys out there who are thinking, oh yeah, this is going to go down. And the fact of the matter is that contract 80% of the time is going to go worthless. So just for having the money in my account and just using it as leverage, I'm making money over hand over fist. Meanwhile, the little guy is losing his ass or he's just flipping premium.
So FaZe.
Yo.
Thanks, Faiz. I gotta go.
Yeah,
So
man.
thank you so much for your help today.
No problem, Siddiqui.
So I just got into the call. So selling premium, it's not as exponential as buying and selling options, but it's more consistent growth, correct?
That is correct.
And it's less riskier.
Define risk.
So I mean, I've been in like 10 plays over the past few weeks. I've lost like 30% of my account. This isn't what really happens with, I mean, that's not proper risk management, but you're talking about the amounts you're putting in and losing. $150, $200 isn't as much as I've been losing at all. So it doesn't sound too bad.
The difference is that when you lose everything that you put in.
Yeah.
Right? If you bought a call for $150 and it goes completely against you, when you close out that position, either you're going to close it out, let's say 50% loss, or you're going to be like, no, it's going to come back. It's going to come back. And you're just hoping and praying to God that it does come back. And more often than not, Theta is just going to burn it out to be worthless. To me, that's high risk.
Yeah.
To me, that's high risk. Versus the play goes completely against me, and I get assigned shares, 100 shares of a company that I liked at a good support level. To me, at a discount. Like
Yeah,
for me, that's very low risk. But
Mhm.
then again, my mindset's different. My mindset is that of an institution. My mindset is not that of a retail guy that says, no, I need to make $400 per day. Who gives a damn how much I make a day? I don't give a damn how much I make a day. I look at my overall P&L, and my P&L last year or last month was, I think 22%
Wow.
on my leverage utilized. My P&L last year was, I think overall, I think I generated like 15 or no, 12% last year on leverage utilized annually on leverage. I still made very good money. 12% month over month.
So your monthly average is 12%, or
Yeah, on leverage utilized,
okay.
meaning on 30K was making 12% month over month.
That's pretty damn good.
There you go.
Yeah.
I literally, let's put it this way. I turned 30K and I literally made it 100%. Yes, we both did.
Yeah, that's sick.
Yeah, I turned. So with long-term holds, along with the CSPs and selling premium, I yielded a little over 130% year over year. I turned 40K into about 150
And that was in 1 year?
in 1 year, from literally.
Wow.
Yeah.
I wish I knew you guys a year ago.
You know us now, and that's the point here. Is we can teach you this. $10,000. Let's break it down, hostile. Let's say you start off with 6K in your Roth this year. You make it 100%. That's 12K. You add another 6, that's 18. You 100% that 18, you're at 36. You add another 6, you're at 42. You 100% that, you're at 84. You add another 6, that's 88. You 100% that, that's 172. In 4 years, you turn $24,000 compounded to $180,000 in 4 years. $740. Year 7, you're at $1.5 million. Starting off with just $6,000 a year that you contributed only 4 years for. So you only put in $24,000 over 4 years, and you turned that into 7 to $1.5 million. But it's doable. It's doable.
Eh,
You guys have seen me giving out a whole bunch of alerts out there. I'm not a Cal or a Tilio where I'm scalping or I'm day trading day in, day out, and I have to give you guys 3 plays per day. I give you guys 3 plays per week. And even that's a stretch, to be honest.
And you're not looking at your screen
Not
all hours of the day,
once.
which is terrible.
Nope. I look at the screen in the morning, I look at it at lunch, and
That's
I look at it in
beautiful.
the evening. That's a different story. That's just because I'm giving alerts back out. But I mean, I'm in calls all day, so it's not like I have the opportunity to trade all day. But yeah, I'm looking at my screen, I'm looking at my positions, but I'm not stressing on those positions. I'm not crying about, oh my God, the market just took a huge shit today. Oh, okay, cool. I was still, Hostile knows, I was in like 7 or 8 positions when we had that huge dump on SPY last week. And I still said, hey, even if we go to 365, I don't give a shit. Even if we go to 355, I don't give a shit. When we had the huge dump in October, where we dropped a huge amount on the SPY, my whole portfolio was red. And I had like 8 positions open. A lot of money out there. What did I do? I just rolled my contracts. Rolled my contracts 2 weeks out. And literally like 3 weeks later, we were back in the green. All my positions closed out in profit. Like not a little bit of profit, like almost max profit. And I actually made more because I collected premium on my rolls. What I'm trying to explain to you guys is that, look, making money is not hard. When you sell premium, making money is really easy.
So, Face,
Guys-
can I ask you something?
Yeah.
So, I'm trying to compete at a professional level as an athlete, and I realized that day trading would not be possible with trading options throughout the day. And it sounds like selling premium that makes it a little bit more possible because time isn't needed there all day.
Let me ask you this: what do you play?
Golf.
You play golf.
Yep.
If you get to national level and you get me tickets to Augusta, I promise you, I'll teach you the strategy 1-on-1, dude.
I mean,
I'm joking, of course.
I have a few friends who are there right now, so.
Oh, I'm sure you do. I mean, if you're competing, good luck to you.
Thank you.
But yes, it is very easy to do, especially when you're out in the course. You don't really have the time. You're focusing on your game.
Yes.
You're trying to compete on a national level. You don't have the time to day trade all day long.
No.
But if you can understand support and resistance, and you can understand how the Greeks play into your contracts, what you can do is you can put limit orders in for I want to sell a put at this level, and I want to close it out at this level. And you do it out in the morning. You put all your limit orders in on the things that you want to get into. You go ahead and put your limit orders in on what you want to close out, and you go out to the course. And at the end of the day, when the market's closed and you're ready to go back home, all you do is pull out your phone. And you say, "Oh yeah, this closed out, this opened, this closed out, this opened." Oh, and while you were out there playing golf all day, you found you just made yourself $750 in a day.
Yeah.
On a small account. Imagine you have $1 million in the account.
Yeah, that's my goal. I'm 18 years old, and I'm looking for. I mean, I've been told it's impossible to do what you guys are telling me, and I
Because that's what everybody wants you to believe.
Exactly.
That's what the world wants you to believe. Trust me, guys, I did it. Before I was profitable, Hostile can tell you this for a fact. Hell, ask Tilio. Tilio will tell you. I remember a point in time before we had all these people in the server, when the server was small, and I'm talking about like 100 people large. Tilio would put out an alert, and it was written in stone that I would buy that contract and it would turn to shit. It was written in stone. Every time I would buy a Tilio's contract, he would hit 10 in a row. The one that I took, the 10 that I didn't take, they would all hit jackpot. The one that I would take would turn to shit. Guaranteed.
Can you guys, hey, I'm sorry, I joined I think a little bit late. Can you guys just go to like square one a little bit on like what the difference, what the main difference is?
Look, so I'm sorry, I don't mean to sound rude
That's fine.
here. I apologize, but the session is recorded.
Okay.
Please watch the video once it's posted. Reach out to Hostile and I will be happy to answer your questions. But we've gone through a lot of information here, and I don't want to be unfair to the people who are on the line who do have other questions.
I understand. I just
please, I don't want you to take that rudely or anything like that. But please do watch the video. Please feel free to ask questions once you've had the opportunity to watch it.
Sounds good. What time does this usually start?
Typically, we start at 8 Eastern. Today, we started a little bit later. But moving forward, we'll be having a lecture Thursday nights at 8 Eastern.
Okay, awesome. Thank you.
No problem.
Yeah, I got a question.
But yeah, guys. Yeah, go for it.
Oh, can you hear me? Okay. I know you're saying $10,000, 6 years, turn it to $1 million. You should pitch a 6-year membership to MMA, by the way. But if
that's a good idea. I gotta give that one to MMA now, man.
yeah. Just get me the 6 year for free. Don't worry about it. But if I got like $3,000 of capital, would I be able to start with that, or should I just really build up my portfolio to that $5,000 or $10,000 first?
I would get yourself to 5. I don't want you to start off with $3,000. I'm not saying it can't be done. It can be done, but I don't feel comfortable with you at a $3,000 portfolio to sell premium. At some point in time, I will be doing lectures on credit spreads where you don't need that kind of leverage. But that's a much more advanced strategy than what we're talking about here, and it's not something I would recommend for beginners. Get yourself to $5,000. Start selling puts at that price, because if you're doing it at $3,000, then you're playing with tickers that are in that I'm stable, but I'm not so stable yet, and it can be risky because you have money tied up for a long period of time for profitability that's not that great initially. Doesn't mean that you won't be profitable, but you're not going to see the kind of returns that you're probably expecting. Again, anticipate 1% per week. So if you're only using $3,000. That's a lot of leverage to just make $30 a week. That's still $120 a month. But if you got $5,000, it puts you in a better position to at least make $200 per month, which can grow to $2,500, which again, $2,500 over the course of a year in a $5,000 portfolio is still 50% annualized. Yep, absolutely. Follow Mario. Yeah. Mario's doing a phenomenal job with share swings. Speaking of which, did Mario join today? He didn't interrupt me today, which is really weird because I always interrupt him. He is a saint. I'm the devil.
Alrighty, I appreciate it, man. Thank you.
No problem, buddy.
Hey, FaZe.
Yo.
Hey, how's it going? So the CSP and all that stuff, amazing stuff. Like, yeah, today I thought you guys were 8 p.m. Central, but I mean, I still caught up with you guys. But so like support levels, I know you answered a lot of my questions through other people, but a question I had was like, instead of like for the support, and this is what Hostile mentioned. You sell it at the support, but say the stock keeps going up, and for smaller accounts, do you still play that same? So, for example, Snap. You know how I saw your post. It's like $49.50. Do you just consistently play that on the weekly, or Like, I know you said 3 weeks, at least 2 weeks,
typically
but
go 2 to 3 weeks out.
okay.
So
So
for
after
example,
that, you get
Snap went up to
profit.
$60, right? And then on earnings, it
Yeah.
jumped down to 52. I anticipate that we will see a new support at around 53 to 54. Don't expect to see us going down to 49. Before I enter another stock play, I'm going to see how the stock plays out, see what buyers and sellers are doing before I enter it again. So when I see where that new support level has established, maybe it's reestablished at 49 again. I don't know. But I'll wait to reestablish that support, find that new support level, and based off of that, I will play a 2 week to 3 week out CSP on Snap at that new support level when it gets there. I will not wait, or I will not enter when I see it at 57 or 58, knowing that it's quite possible it'll come back down.
Got it. Okay, cool. Thank you. It's just like the whole, I get the concept of, buy at support, or sell at support, and hopefully goes up, but then, and like, obviously, I have a smaller account, and so my goal right now is to at least, build it to the 5 to 10 you guys were saying. And I mean, it's very like this strategy is like amazing, and I feel like it's so stress free, and I'm the same way. I feel like I purchase a stock and it's like, oh no, what's going on? And especially if it's like an option, like a call, and I'm like down, and so I want to be consistent, I want to be profitable, but like you said, I appreciate you guys sharing, like, it's ultimately patience, and then you got to build up to it. And yeah, it's just, for me, like, I want to do the strategy, but like you said, it's like $30 a week. It's like, I'm putting in $3,000 for like $30. So that's the part that kind of like is like, I'm hesitant, but
yeah, it gets frustrating. I completely agree. That's why I say a minimum of $5,000.
Got it.
And even then, you may say that, man, shit, I'm putting in $5,000 a month, and I'm only seeing $200 a month. But what I want you to think is because, again, initially you're gonna start off with that $5,000, and you're gonna make $200 a month. You're gonna be like, shit, man, I'm putting in all this money every month, and I'm not really seeing profits. And then meanwhile, you go to Success Tab and you see a guy who bought a contract for 50 cents and or $50 and turned into $350, and you're just like, shit, man. I mean, why? Like, why am I doing this versus doing what he did? But what you don't see in Success Tab is the number of times people fail. And see, when you look at the bright side of things, you've got to look at the dark side too.
Can we get a loss porn folder?
Go to Reddit, you'll see it.
Yeah.
There's a whole bunch of loss porn on GME right now. Like, guys, when you see the guy who's making, who turned $50 into $350, and you're just like, shit. And trust me, I've been there. I did it. I had that same FOMO. And I used to reach out to Tilly all the time, like, dude, how the fuck is everybody else doing so well and I'm losing? You know what he told me? He goes, focus on your portfolio. Forget about everybody else. Stop looking at the Success Tab. Stop looking at the Success Tab. And that's what I did. I stopped looking at the Success Tab, and I realized my profitability is against myself. That same $5,000, if you had it in your bank account, how much interest are you earning? 0.01%. $2.5%.
Probably like low single digits.
Yeah.
Yeah. Mm-hmm.
Again, change your mindset. Change the way you think, and say, hey, what rental property? And the reason why I relate to rental properties is because I think, especially with the new generation, the millennial generation, and the what's the generation after millennials? The Gen X's, Gen Y's, whatever. A lot of you guys younger than me. I'm 32. I'm not saying I'm old, but
Gen Z.
the 20. Yeah, there you go. Thank you. A lot of you guys, I know for a fact that you guys think rental properties is the only way I can make passive income. So think about this. Think of this as a rental property. Tell me one rental property that you can spend $5,000 on and see a $200 a month rent. Find me one rental property. I swear to God, I'll buy 100 of them. If you can find me a rental property worth $5,000 that I can get a $200 rent income out of. $500 a week. Shit, conservatively, 1% on 50K. 1% on 50K. $500 a week.
That's gold. No, the mindset thing is like the biggest thing I feel like that I'm trying to overcome. And obviously, like, you know, this whole thing is like new, and I'm just trying to learn this strategy, and I'm just like torn because I'm just like getting introduced to like so many different strats, and I'm trying to follow all the tabs. I'm trying to find all the alerts, and it's just like really stressful. So that's why I'm like,
here's what I suggest. Here's what I suggest. Don't enter plays. You're gonna think that I'm the most backwards human being in the world. Don't enter even one single play, and instead, on a paper account, take that play. Don't do it with cash. Do it on a paper account, and figure out what strategy works. You can go on Thinkorswim, and you can get a $5,000 paper account, and you can follow my alerts and do it for a month. See your profitability. Go the next month, take that same $5,000 account and do Tilios plays. Follow it for a month. See your profitability. Take the same $5,000 paper trading account, do cows for a month, then do sharks for a month, then do Zabes for a month. You may think for 6 months you want me to sit here and pay $50 a month for this Discord, and I don't make a single dollar. Yeah, that's exactly what I'm telling you to do. Because when you go to school, when you go to university, and you pay thousands of dollars for education for a degree that means absolutely nothing in the real world, you do it, right? You don't make a penny for it for those first 4 years, do you? This is cheap education. This is stupid cheap education.
Can I ask
I'm trying to teach you. Yeah, go for it.
What if you have
Thank
like a $100,000 or $200,000 portfolio and you're just getting started in this? What do you recommend for
You're a
selling
god then.
premium?
If you've got
Yeah,
a
what the
$100,000 portfolio, I will tell you to follow me religiously, because I can guarantee you're going to turn that 100K into close to at least 40K. But that doesn't mean that you have to. You can follow Tilio, and you can buy what he would buy of one contract. You can buy 15 contracts and take 10%. You could follow.
That's pretty much what I've been doing.
You know, you could do Zabes and buy 4 or 5 or 10 contracts on a swing and expect to see red and eventually see green. You could do Cal and do day trading. You can do Shark and see some massive gains. It's again completely up to you. It's not about it's not about how much money I can make. It's about the education here. To be quite frank and honest, man, I mean, if you follow blindly to Tilio, to me, to Cal, to any of the other analysts, you're not getting anything out of it other than money. And all that means to me is that you are dependent upon somebody else to make money. And I'm not saying there's anything wrong with that. That's fine. But if this Discord gets taken down tomorrow, are you going to be able to continue doing that? It's not about finding the right analyst. It's about learning the strategy that the analyst uses. You can have a $100,000 portfolio. You can have $1 million portfolio. But if you don't have the education behind why a strategy is being used the way that it is, then it's completely pointless.
I don't know about everybody else, but that's why is to the education, but um, you know, the positions you'd enter on $1,000 versus $100,000 are probably going to be a little different.
No, hold on.
I like that.
Leaps are fantastic. Yeah, leaps are fantastic. Again, and to your point earlier about the positions that you would take on $1,000 is different than what you would take on $100,000. I do disagree with that. The position itself doesn't necessarily change. What really changes is the risk tolerance. That's really all that changes. The guy who has $100,000 isn't worried about a $100 contract. The guy who has $1,000 portfolio is worried about a $100 contract. It's 1% of your portfolio versus 10% of somebody else's. So it's a difference in mindset, but the risk is still the same. It's just the tolerance of it. That's all that changes. So I urge you to not just seek the education, but understand the strategy that you want to follow based on not just your risk tolerance, but how much time you have in the day. If you've got $250,000 in the market and you don't really need to work a job and you have the time to day trade, then by all means, take Talil Scalps. He's very, very good at it. I mean, he's a beast at it. But if you don't have the time to watch the markets continuously throughout the day, then this strategy works beautifully for people who have other things that they can't focus on the market all day long.
I'm seasonal in construction, so right now I have time to watch it 8 hours a day. But come March, April, I'm not going to have that time anymore. So I'm looking to, get into some other strategies that don't require so much attention.
And see, for that situation where you're not, again, just like the other person who's working to be a professional athlete, a lot of times, you can just go ahead and put in the orders the morning of, based on the Greeks, and then go about your business. Not worry about a damn thing the rest of the day. Market goes up, market goes down. Who cares? This strategy is. Most people see this strategy as passive income. I see this strategy as active income. Just again about the time that you're willing to dedicate to it. That's all.
Thanks a lot, guys.
Absolutely, bud.
And a lot of that has to do with finding the strategy that works for you, right? Like FaZe is saying,
Hey, I'm gonna go on mute for just a few minutes. I'll be back.
All right. Like FaZe is saying, if you have a full-time job and you can't do something because of it, you got to figure out the strategy that's going to work for you just as well as if you were able to sit here and watch the market. So understanding the type of strategy that you're trying to do and understanding how it fits into your lifestyle, that's the first step. Then you can continue on with your lifestyle, not change it a bit, and make money in the stock market. Now, if you want to be a day trader, you win the lottery and you want to be a day trader, have at it, right? But those of us that work full-time jobs, it's impossible to day trade. Impossible. And this is a perfect strategy to supplement. And not only does it supplement, it turns money making into a consistent thing. And over time, it's going to compound and capitalize to the point where you can quit your job.
Hey Joe, I have a question. First of all, thank you for this lecture. Can you hear me?
I can hear you. Not sure who Joe is,
Okay.
but
So,
That's a hostile.
uh, oh, hostile, sorry. So basically, just want to understand. So when you're selling a contract, you collect the premium, which is $2. For example, it's $2. You collect 200. So what is the downside when the stock price goes down towards the strike price? And at what point do you either cash out or roll over? Because you're already collecting the $2. Are you collecting like a percentage of it also?
so I'm assuming you're talking about cash secured puts, since you're saying price coming down to your strike, right?
Yeah, suppose you're selling like a premium, a put on a stock. So you're collecting the premium, right?
Okay, so
But
if you collect $200 on a position, let's say you sell a 30 strike, the price is 35, you collect $200, price comes down to 30. By expiration, if it's above $30, you keep full premium. Now, if it goes in the money prior to expiration, say $29, you're still basically going to be up $100 right before expiration, right? Now, if you want to roll that position, so let's say you don't want to take assignment of shares, right? So that's the first thing that's going to happen. If you let it expire in the money, you're going to take assignment of shares. But if you don't want to take assignment, you can roll that contract. Now, typically for me, depending upon the stock, where it's at, how much time I've got left, what premium it's offering, where implied volatility is, that really determines when I roll the position, right? So number one, if I'm in the money and I've got 5 days left until expiration, rolling is on my mind, right? And in those 5 days, let's say I'm deep in the money. Let's say I'm at 25. Strike is 30. Right now, the nearest expiration is a week out. So let's say Friday, it's Monday. Let's say contract expires Friday. You're down $5 in the money, right? Next contract out is going to be the following Friday. Let's just assume that it's got weeklies and monthlies. That Friday, the one after the expiration, it's not offering premium because the strike price is too low. So you're not getting premium. So basically what you have to do is go to the next contract. You keep going further out in time until you see a premium, right? Now, that last 5 days prior to expiration, like FaZe was saying before, is you want to wait till the stock does a pump. In those 5 days, it's going to pump somewhere. And when it pumps, that's when you roll, right? And you want to see some kind of green candle for the day. Typically, we see green in the morning. That's usually when you see most of the green. So you want to roll it, and that's hold on a second, please. When you roll it, you're going to roll it when it's pumping, and you're going to go to the closest contract that you can, right? That's paying premium. Now, what I typically like to do is I will roll down a strike as well. So I'll go to the 29 put from the 30, right? And then I will go to the closest expiration out. So because I don't want to stay at the same strike, if the price is down below, I want to try and come towards it. And I want to try to come towards it with some kind of premium, right? Whether it be $15, $100, whatever the premium is, that's the goal. So if I can roll it down, the strike down, and take in premium, that's a double bonus for me. Now, if it's so far down to where you can't get premium if you're rolling down the strike, then you're just going to have to roll the contract and keep the same strike. But typically, good premium is going to be in a position that has good open interest. If there's no open interest, there won't be very much premium. You're going to see a big discrepancy in a position or in a strike where there's 3,000 or 300. The 3,000 position of open interest strike, that's going to pay you some premium, whereas the one that says 30 open interest, it's probably going to debit you. Does that help answer your question?
Yes, but it's a lot of information because I'm a beginner. Um, so just trying to understand. So let's say you sell a put premium at $25 strike price, and you are taking profit because you are bullish on the stock, right? So you're selling the premium to someone else who is bearish on the stock. So what is the downside when the stock goes down? Because you collected the premium, but if the stock goes down, you are you
The
have
downside
to
is
you
you
have to
own
cover
shares.
the position. Okay.
That's it. The downside is you own shares.
So at what point do you know that you have to get out of that contract? Can you get out, or you
Well,
have to
you got two choices if
wait
you're
until
down.
the end?
Right? You got two choices. You take assignment or you roll.
Yep.
Right? You roll
Okay.
first. If you can't get credit anywhere, if it requires 6 months of time, basically selling a contract, rolling out to a 6-month contract out, that's not necessarily feasible. So at that point, that's when you take assignment of shares. Unless you really want to own the shares and it doesn't matter to you, then you just take the shares. But don't sell CSPs on something you don't want to own shares on. That's the risk, right? If you don't want to own the shares, then you shouldn't be selling CSPs on it because we can't time the market. We don't have magic balls to tell when it's going to pop or whatever. All we can do is look at the chart and say, this is a strong support area. I believe that this is a strong support area. There's a lot of open interest on strikes around this support area. There's a couple of things you could look at and create a checklist out of and say, well, this checks out, this, and this checks out. I think this is a good position to get into. All right, but there's nothing stopping it from going lower. So if it goes against you, you got two choices: take assignment or roll. Right? And there's checklists that you have to go through when you want to roll something. And I just went over that just a second ago. So maybe go to this part of the video and re-listen to it until you understand it, because it is a loaded question that you're asking. Right? It's not as simple as do this. Right? It's pretty loaded and it's complex. And this is what I mean by when you're new to this type of trading, you have to go in slowly, right? And you have to really understand what you're doing. And stuff's just going to have to, you're going to have to take assignment on something to really see what happens, right? And something's going to have to go against you for you to see what it looks like when you want to try to roll it, right? And when you get into that scenario, that's when you contact us. That's when you message us, say, hey, I got this CSP, it's against me. How do I roll this? How far out do I go? What would you do? Right? Because it's not as simple as just saying do this, do that. Okay, now you're successful. It's just not that simple, unfortunately. But once you get the hang of it and you understand the concepts and you know what to do when something specific happens to that position, it then becomes very simple.
When you say when you say roll over, you mean you sell another contract, like out of the money, or not out of the money, but far, like
further expiration. So if something expires this Friday, you roll to the following Friday of expiration if there's a contract that exists. right? Some stocks don't do weeklies; they only do monthlies. So you're instantly limited to the time frame of just a month-to-month contracts. Now, Apple's an example of weeklies. They got weeklies, so you can roll stuff weeklies. TNA has weeklies, but there's other stocks out there that only have monthlies. So when you roll something, it's basically just saying, I'm going to close out the contract that I'm in, and I'm going to roll into the next one for credit, hopefully. If you're not getting credit, if it requires you to pay a debit, you need to take the shares. Never, ever pay debit when you roll. Ever. That's a major no-no.
I don't understand. Sorry, I don't understand when you say a debit, like you.
You have to pay money to
You're,
roll
you're
that position.
okay. I see.
So think of it as like a
You
checking
will see
account.
that
When
on
you get a
your
credit in your checking
Facebook.
account, you're getting money. When you're getting debited from your checking account, you're taking money, right?
Right.
Same terminology here.
Isn't it interesting that I come back right when you tell people not to ever pay a debit when they're rolling?
Because FaZe has done it.
Guys, is this where I interrupt?
Here.
Me
Hold
too,
on, wait.
Hostile. You know that.
Wait though. The gentleman that was asking the question just now recently, did I answer your question?
Yes, Hostile. Thanks, man.
Okay. Now, Treep was next.
Now I can interrupt?
Let Treep go, and then
I can interrupt.
yes. Wait, well, Mario, wait till FaZe starts talking, and then you can interrupt.
And then I can interrupt. All right. I need to plan my
Oh,
interruptions
Mario's
better.
here!
Treep. All right. He left. Didn't get his question answered immediately, so he didn't like that, I guess.
So real quick, Hostile. I don't know who the gentleman was who was asking about debits on a roll. Can I provide my insight here?
I would
Because
say
I have a
yes,
different-
but he
Yes, please.
might get confused. He's new, so I don't want to overload him with too much information.
That new PDF that Telio made, or that you guys made, pretty good basic information.
Oh, that PDF is gold.
Yeah, PDF has everything, bro.
That PDF is literally, make that your holy book.
It's the fucking Bible
for option trading. I'm not going to call it the Bible because I have religious beliefs. I know others do too, so I won't call it that. But that is your holy book for option trading. It has so much material. Hell, I learned from that manual that he created. It is gold. Utilize that to your knowledge.
Mario.
A shout out to Trey the Rogue for sending me a DM
Mario.
about the Tilio's new
no
PDF.
problem.
What's up, Hustle?
You missed your chance.
It's all right. I'll still.
Where is the PDF posted?
Called Beginner to Advanced PDF in the education.
Thank you.
Mario, what did you want to talk about?
I just wanted to give FaZe a hard time.
Oh.
You know what's funny is I was talking about you earlier in the lecture today. Yeah, I literally asked in the lecture today, where is Mario? I'm talking and he hasn't interrupted me, and I always interrupt him.
Should I go on a 30-minute tangent about how share trading is better than CSVs?
You should. I'll just cut you off.
Hey, Hostile.
Hey.
So you said never take a debit. So if the trade goes against you, we just let it expire and just take the shares?
If you cannot roll it for a credit, then you take the shares.
So never close it out for a loss.
No, never close for a loss. Because the whole purpose here is to not lose, right? That's my motto. I don't lose. I bag roll if I got to. I roll positions if I got to, but I'm not taking a loss. I don't care
So
what happens.
let's just say, for example, we're using a 10K account. We do the TNA. TNA reverses on us. It goes against us. Now we're kind of screwed. We get assigned the shares. Then we're they're at 9Gs tied up. Roughly,
Well,
or
number one, I wouldn't recommend doing TNA if you only got 10 grand. You need to have 30 or 40 grand to do TNA. You got to be able to allow yourself to have additional leverage to do other positions in case you get stuck into one, right? I mean, perfect example of me. I'm in a position right now where I've got 7,000 worth of leverage stuck. I've had to roll the position twice for credit, mind you, and I still have money to go and get into other positions. So you don't want to shoot yourself in the foot and just be stuck because all of your money is tied up into one position, right? So
right.
make
you
sure
sell
you
covered
leverage
calls?
it.
Is that like the will? Like you just
Yeah,
kind of sell calls
that
on
is
like
that is
an
the will,
assignment?
yes. So you get assigned a CSP. So you sell a CSP, you get assigned, then you turn around and you sell covered calls on those shares that you get assigned.
You can use that money to do other shit too.
Well, yes and no. You're not going to get a lot of money for covered calls, right? I mean, it's going to be a little bit less than you would for selling the premium or for selling cash secured puts because of the fact that you got assigned, which means you're in the money. So you're basically down on the position. So when you do covered calls, you're going to get less premium. You're going to get premium
for a pump.
typically, right? So the way I like to do the wheel strategy is, let's say I sell a 30 put. I take in a $200 premium. That's $28 break even. I go in the money to 26. I'm at 26, so I'm down 200 on the shares that I got assigned. I need to sell the 30 put covered call on those shares because number one, I want to keep the $200 premium that I first got, and number two, I'm going to take an additional premium from that call. So if it does take away my shares at the 30, I'm going to have kept the 200 premium plus.
Yeah, exactly.
If I sell it and make 125 on that call, well, now I'm at $325 of profit.
You got premium for both, and you're back out break even, like on your shares.
Right. Yeah. So I mean, that's the idea here, is to just, no matter what, you keep the full premium from both directions. So, and how you do that is you sell the same strike you got assigned.
Okay, that makes sense. And you get more money because it's closer in for the call.
Well, typically, if it's at $26, not going to get, you might get $100, right? So I mean, you might have to wait for it to kind of pump up a little bit, then sell it, and
Okay.
maybe you can get 150, right? Or wait for IV to pump, then
Yeah,
you
that
sell
makes
the call, right? But if all things remain the same and it's at $26 stock price, the chances of you getting $200 or $100, I think, are a little slim unless you go further out in time. Right? So like,
Okay.
let's say TNA is a perfect example. Let's say you're doing a 65p, like what Tilio FaZe did, maybe a week back. He did a 65p. Let's say he got assigned, and now the stock price is at 60, but he got $250 in premium, so it's 62.5 break even, right? You could probably go 2 weeks out at the 65 strike on a call and get $250 because it exists for that. But for some other stocks, it may not.
Yeah. Either way, you can cover your losses with that strategy. It's awesome.
Absolutely. And you can, if I sold the position and got assigned, and we're at that $26 note mark, and then I'm able to do covered calls at 30 call and take in $100. Let's say it expires worthless, and the stock price is still at, say, 28, right? Well, my break even was 28, and now it's 27 because that $100 that
Yeah, you
expired
just keep
worthless.
doing it. Yeah.
Yep. And in that scenario, if it expires worthless and you're still holding the shares, you can resell it at the same strike or go up $1, because again, remember, when we sell cash secured puts, generally we want to do it off of support levels. And if you sold that 30p off a support level, you can easily go up a strike. Those shares will gain $100. And if IV's up, the stock is going upward, it has momentum up, that premium on that 31 is going to be more than $100.
So we can make a hedge fund, give all our money to FaZe, and just let them fucking, just let them pull that 2%.
Honestly,
I'm just waiting on
Let's
Tilio
go.
to give me my $1 million so that I can.
Yeah, where's that PayPal?
I told Tilio if he gives me $1 million,
Snitch.
I'll just get a place in the middle of nowhere. I'll sit on my computer all day, and I'll just make my 1% every week. Sit on $500,000, and I'll pay him back in 2 years.
Yeah, it's sick.
So this is why we're doing the 15 to 50K. So that once you guys get to 50K, you guys can do CSP all day with FaZe.
He's so. You know what? The funny thing is, guys, I will probably be participating in Mario's 15 to 50K.
I probably will also.
That's how good Mario is at share swings. And I think Mario was surprised by the number of people who are interested in that, because I think a lot of option traders like myself and Hostile tend to forget. Well, not Hostile. Hostile does a lot of share swings, but a lot of option players like myself who do a lot of CSPs and a lot of selling premium kind of forget the value that owning stock and swinging stock really bring.
That's like every analyst is joining the challenge. That's kind of scary.
And you got a lot of pressure on you, bro.
Dude, you, Stock Daddy, Hostile, Tootsie's in it, Ricky's in it.
I'm pretty sure Tilio's going to do it with you too.
I think he already takes my plays. He just doesn't tell me.
Oh,
He
I'm
probably
pretty sure
does,
he does.
because he's checking on you.
Yeah,
I know
I
he
wouldn't
is.
be surprised if he does the same thing with my plays.
Anyways, I'll let you
It
guys
not
go.
surprise me one bit. I'm sure, like he probably takes our plays and sees, okay, what's the profitability? Because he wants to make sure that the people who do take our plays are actually seeing positivity out of it and actually seeing profitability, versus us just kind of saying, oh yeah, you've got 25% profit. Because
I mean,
you know it's
we're the
easy
only
to
two
say
with
it.
0 losses out of all the analysts.
Oh, I realize that. Hostile realizes that. Hell, I think now Anth realizes that. I think before that, MMA didn't realize how. I know for a fact that up until Hostile talked to him, MMA didn't pay attention to the selling premium tab at all.
All right, man. Little by little, people will understand. Open their eyes.
Well, the thing that a lot of people don't understand is there's a way to get into all types of option trading, and it starts with shares. And then the second thing should be CSPs, right? And then the next thing you should be doing are leaps, buying leaps. And then after that, you can start doing monthly swings. And then once you get good at that, then you can start scalping and day trading. Day trading and scalping is the hardest thing to do, hands down.
Why is that?
That's what I'm best at.
Because it's nearly impossible to understand the direction of the stock. It's nearly impossible. Like, out of the decade that I've been looking at stocks, I still can't tell you which direction something's going to go. It's impossible. Unless you're highly skilled at chart analysis, but also knowing chart patterns and knowing candlestick patterns, right? And then being able to look at having just a couple other things in your toolkit, such as, I don't even want to start naming things because people might start going out and trying to use those types of things, but there's just things out there that may work perfectly for you, and it's another piece to your toolkit and allows you to have an edge, right? The idea here is to find that edge that works for you. And beginners should be starting with shares, number one, in my opinion, right? Just an opinion. Take it for whatever you want it for. But in my opinion, you should be starting at shares as a beginner so you can understand how stocks move, price action, what volume is, and learn how to read charts. Know what
You
support
can
and
still make a
resistance
lot
is.
of money.
You can make tons of money doing shares. Think about, I say this
Yeah.
all the time, Warren Buffett. He doesn't do options. You know why? Because he's doing $100 million a position. Right? He has
Actually,
a few
Warren Buffett
billion.
and Berkshire Hathaway do cash secured puts and covered calls.
Yeah, but it doesn't make the kind of money he's looking for.
Oh,
I've
of
heard
course
him
not.
specifically say, I don't do small positions. I need
Absolutely.
stuff that I can throw $100 million at. And name an option that you can throw $100 million at. Maybe Tesla, maybe Nvidia, maybe Netflix, maybe these big ones, Amazon, maybe. But that's just one position of 100 million. He's got billions, right? He's got billions in Berkshire Hathaway. He's trying to trade billions. And his whole goal is find the stocks that are cheap. They're on fire sales and buy shares. And I'm going to put 100 to $300 million into them. Can't do that with options. You're going to run out of choices fast, right? I mean, Apple's got what, 100,000 contracts and sometimes for like a 130 strike, right? How much money is that? Let me take a quick look here. Let's see. We're just going to do some quick math so I can let you understand how much money this guy has to play with. So let's say he's doing the March contract for Apple, right? 137 and a half strike. Okay, that costs $625 per contract. Okay, 625 divided by 100 million. That's 160,000 contracts. That takes up quite a bit of a position, and that's going to really make that stock. I mean, that's going to basically manipulate the stock in a direction. And he doesn't want to do that. He doesn't want to be in the position where his positions change the price of the stock too much, because it affects him negatively when it does that. Because when it pumps, so let's say he gets into a position with $200 million and the stock price goes from 50 to 60. How many people are going to be selling that position now? And his entire 100 million or whatever he just put in there is now at what's a $10 loss from 60? Was that 20, 40, 60, 80, 15% loss on his money instantly? He doesn't want that. He wants to be able to get in under the radar and the stock don't really move too much. That's his goal. So you got to remember, the really ultra rich, they're doing shares. And they're not worried about expiration, right? They're not interested in watching their position day in, day out. I mean, it's impossible to get into something. I mean, you know, he could. Here's an example. The 132.5 CSP for Apple in March 19th has 6,200 open interest. He could put $100 million in that position, and it will be the largest open interest position, right? And that's those types of things that you see with golden sweeps. Somebody getting in with a major infusion of cash. They don't want you to know what they're doing. They don't want you to know where their money's going, because they don't want anybody following them, and they don't want anybody using them to benefit themselves, right? So like, they don't want me to use them so that I can benefit from it. Right? They want to benefit. They could care less about us. They don't want us benefiting. So again, that's his goal, is to be incognito in the market with $100 million per position. And he does that with shares. Because when you look at something out there and say, this thing traded 30 million shares today. Well, think about that for a second. If a stock's $100, or like Apple, it's 130 plus. Let's see, how many shares? So Apple did today 31 million shares. Right? If Warren Buffett bought shares, 137, or wait, 100 million divided by 137, that's 730,000 shares. He can totally go in under the radar when 32 million were done in one day. Right? Options is for people that got $1 million, 10 million, 50 million, maybe 100. I'd still do options with that kind of cash, but I'd be doing a lot of shares too. Right? So, I mean, to be honest with you, when I get in the position where I'm doing shares and CSPs and leaps, I'm probably never going to day trade. Like, it's worthless to me. Right? Not interested. I mean, if I do those 3 strategies alone, that's got to at least be $500,000 to $1 million in the market at any one time. Right? The scale that I'm thinking about, 50 to 100,000 per position, right? Let's say I got $2 million. I want to have 50% in the market, $50 to $100,000 per position. If you're getting into positions that size and you're making 5 to 10%, that's massive. By yourself, that's massive. Right? I mean, let's say $100,000 in a position. 10% is 10 grand. Right? Now, FaZe and I, if we've got a position where we're seeing 15 to 25% on our leveraged money, right? So that means if I put in $100,000 and this CSP is paying me 15 to 25% in leverage, that's $15,000 to $25,000, right? So let's just assume for a second that we get something that's 20% leveraged, and in the first 5 days or first 3 days we see 50% return on that position. That's 10 grand. 10 grand. Just like that, instantly. I see the power of having a large amount of money. You can make so much money in such a little bit of time, and you don't need to commit very much time into it. You don't have to put a lot of effort into it. In scalping, there's a lot of effort that goes into that. There's a lot of risk, and there's a lot of loss. Yeah, there are some people that are successful. Tilio's a perfect example of how successful someone can be scalping. Right? Tilio makes more money than everybody here combined, I guarantee you. But he's really good at scalping. He has a solid strategy. He has hedge. He knows how to hedge. He's got a backup plan. And he's got all kinds of stuff worked out. So unless you have all of that stuff working for you, I wouldn't bother with scalping. Simplify your trading so that you don't put yourself in the position to be pulled in many different directions as far as analysis goes, as far as the things you're watching, as far as stress, emotion. I mean, there's just so much that goes into it, right? If I'm doing CSPs only or shares only, it's not really too much that I need to do. Right? I don't need to worry about the stock price all that much. I don't have to sit in front of the computer and babysit those scalps. Right? If I'm scalping, you got to babysit that stuff. I got to take it 10%. And if you take too early and it goes up 50, 100, 200%, you're angry with yourself. But with a CSP, it's impossible to be angry because you already know what the maximum amount is that you're making. Shares, there's a way to maximize profits. It's called trailing stops. If the stock price goes up to a price that you're happy with, that you will take profits, you set a trailing stop so you can let that stock continue to pump. And then the moment it falls, you get stopped out, and you made more money than you would have at the initial price or profit target. But with scalping, man, it's a different ball game. You're really in a position to lose. That's my opinion. So beginners start with shares, then you roll into CSPs and covered calls, the wheel strategy, right? And then you do both. If you can get to the point where you can get into 5 CSPs and buy 500 shares and do 10 to 15 positions, you're going to be making so much money, you're not even going to give two shits about scalping. Why would I mean, yeah, I could get in, I could buy 100 contracts or something to scalp with, and if I'm making, let's say $50 a piece at 10%, I mean, yeah, that's a pretty decent return, right? But you just got to remember, is it worth what you have to do to get it? Somebody a long time ago told me, don't work hard, work smart, so you don't have to work hard. And day trading and scalping, that's working hard, man. CSPs and shares, I can put my feet up. All right, I'm done ranting. Anybody's got questions?
Yeah, I got a question, Hassel.
All right.
When it comes to choosing a strike for CSPs, do you like, other than open interest, do you want to choose a strike that's under your support level so you have like a buffer zone?
0.3 delta.
FaZe likes to say 0.3 delta. I don't necessarily look at the delta. All right, so there's the difference between he and I. There's nothing wrong with the delta. I mean, it's a great strategy. For me, my main goal is to get it right at support. And if it's at the money, I really love it. Support at the money, that's my favorite. All right. And if it goes against me, so what? It's a CSP. Right. I get the most premium at the money. Now, open interest has to be there though. So if open interest is not at the support level, then you got to go where the open interest is. Sometimes, unfortunately, it's above support. Sometimes it's below. And when it's below, it's less money. Right. So, but generally, the open interest exists right at support because everybody knows it's support. So people are getting that strike because it's support. Now, if it lines up perfectly where FaZe's 0.3 delta is at support and open interest is there and the premium's right, that's a beautiful world.
I got you there. So I'm asking because I'm looking at the PLTR play that FaZe called out, and I'm seeing the support at like around 31. So I'm curious to know like why he chose the 30 strike instead of the 31 strike.
FaZe, you want to answer that?
I'm so sorry. Could you repeat that?
So I'm looking at PLTR, and you called the 30 put, right? And I'm just curious. I see a support at 31, like around 31.20. I'm just curious to see why you chose the 30 put instead of the 31 put. Is it because the open interest is just so much higher on that contract?
That was part of it. The other reason was that I like the cushion that I had on the 30 put versus the 31. The 31 was giving me, I think, I executed the trade at 230, I think, $2.30 in credit.
Yeah, I
Whereas
think that's what we got.
31 was giving me like 250 or 260 at the time. So it was taking on $100 more risk for $30 more in credit, and I had more OI at the 30. So I decided to go with the 30, where I felt like I had more protection to the downside. And psychological, you got to think about psychologics here as well, right? Psychologically, 30 is a round number. The likelihood of PLTR dumping below 31 down to 30 is higher than PLTR dumping down to 29 and not bouncing back to stay at that solid 30 level. You see what I'm saying? So you got to play a little bit of psychology in this as well as to why you're selecting a specific strike. The other thing is that the delta on the 32 or the 31 was a little bit higher. Right now, as I'm looking at it, the 31 is showing a 40 delta, whereas the 30 strike is giving me a 35. At the time, I think I was looking at this. I believe the delta was sitting at 31 or 32. So again, I like to be a little bit more conservative, and that's why I always say the 0.3 deltas, because again, when I look at it from a probability perspective, do I want to do a coin flip and say, hey, yeah, there's a 40% likelihood of this going in the money versus something that I see a little bit more profitability on, where 35 delta or the 32 delta, I have a 68% chance of it staying out of the money. Where I have more of a likelihood of seeing profitability versus at the 31 strike.
So I want to add something to that, and this is where FaZe and I disagree. Right? So he likes to use the 0.3 delta as basically saying 30% chance of the stock going in the money. Right? For me, I agree with that, with the exception that is the current probability of today's price and today's market. When it changes tomorrow, that probability changes, right? So when I look at probability and chances in the money, out the money, etc., I like to use a standard deviation channel, right? Because that's over a longer period where it gives you the probabilities, whereas the option chain, it gives you today's probabilities, whereas again, the standard deviation channels, they give you whatever time frame you're looking at, that's the probability, right? So that's the difference between our trading, and there's nothing wrong with what FaZe is saying or doing. I mean, I agree with it. But when I first learned selling options, I was doing iron condors. And the person that I learned from said 30 delta, right? And what he meant was 15 on both sides, right? And when I was trading that, I did that type of strategy, an iron condor with 15 on both sides. I had positions go against me. And that's when I realized that the deltas, it's for in the moment, present time, right? It could change tomorrow. As of today, this is the probability. What happens tomorrow? What happens if news comes out? What happens? Anything can change the price. And the moment the price changes, your probability changes, right? Because delta, gamma, theta, vega, all the Greeks, they all change each other. Whereas when I look at standard deviation channels, that has all kinds of stuff formulated inside of it, not just Greeks. If that makes sense. So there's just, to me, standard deviation channels hold more water than Greeks. Now, I'm not saying Greeks don't hold water. They do. It's just I'm more conservative than FaZe. Let's say that. I'm much more of a safer trader than FaZe. He's got more aggressiveness to his style of trading, and everybody's different. Everybody's unique, right? And again, that's the difference between he and I. And again, there's nothing wrong with how he trades. Just a little bit more aggressive. His risk tolerance is higher than mine. That's about the best way I can say it, I guess.
Got it. Thank you. And I have another question for FaZe. FaZe, you mentioned an ETF that you were trading in August. Can you repeat what it was?
DFEN.
DFEN. And what ETF is that?
That is the ETF that follows the defense sector. So Lockheed Martin, Boeing, companies like that are in that sector. A couple of airlines are in there as well. But again, it's a great ETF to follow. I anticipate a huge bull run on it over time. The only drawback is that it only has monthlies. So that's something to keep in mind if you decide to trade it. But I think right now it's sitting right around $14. I think at the high it was like $35 or $38. When I was trading it, it was at $9. And I used to play a monthly CSP. I actually did two things on it. With $4,000, I did a monthly CSP, and I also bought shares and sold covered calls, and I made money both ways. And that was only starting off with $4,000. So you can find good ETFs that you can play with and really make good money on with a small portfolio.
Got it. Thank you.
Absolutely.
They just recently pumped FaZe.
What's it at right now? Last I looked at it, was like 14 or
17
$15. Jeez,
in the last 3 days. It ripped. Well, 4 days.
last week it went down to like $14.
It was at 1368. In 4
Yeah.
days, it did nice pumping all the way up. Which
Yeah,
you said LMT
I was
is in
thinking
that?
about it. Yeah, I think LMT is.
They haven't really freaking moved. You know why? Right now I
Yeah,
know.
I said
Because I got shares.
because you got some shares. You know what, Hostile? I think you need to start taking Mario's plays, bro. I think he might be better at share swings than you are.
Maybe. Hey, you could be better at CSPs than me. I'm not the best at any of this stuff. I just know how to teach it. I know the great strategies. Give me $1 million, different
He
game.
taught it to me.
Yeah, but I mean, look,
For him,
that's
I
the
wouldn't
thing.
be here.
Hey, I'm in the same boat, dude. I owe all my success to Hostile, because if it wasn't for Hostile showing me the way, I'd still be losing my ass playing options and blowing up account after account. Shit, I started off again with a $500 account, and I've already blown it, like in like 3 weeks.
Buying options?
Yeah, man.
Fuck that.
Bullshit.
Fuck buying options. Gave that up long
You know
time
what it
ago.
is? You know what it is though, Hostile. Like, here's my mentality on it, and this is what I've changed my mindset a little bit. I won't do it all the time, but every so often, I see, okay, I've done really well this month. I'm gonna put $500 into a cash account and see how it goes. And you know what? In all honesty, it's, hey, I've gotten so good at this strategy. Let me try the buying side. And I truly believe that in order to be a good trader, to be a good, well-rounded trader, you need to be able to play both sides of the market.
Absolutely.
You can't just rely on selling options, or can't rely just on buying options to be a good trader. And I see that with Tilio. Tilio does it all the time. Not just does he buy options, and that's what he alerts, but I've had conversations where he sells options all the time. That's why he's as profitable as he is. And the fact of the matter is, I'm doing so well with one strategy, I need to invest the money and pay the market tuition to learn the other side. And until I do, I will not become a good trader in my mind.
Well, it's
so I'll
multiple
continue
streams
to
of
do
income,
that.
right? I mean,
Yeah, exactly.
multiple streams of income is the goal, right? I mean, that's why everybody's joined the server to do stocks, is because they want to have an additional stream of income from their jobs, basically.
Right.
At least majority of people, right? And when doing what you're saying, doing different types of strategies, that's just going to increase your success rates, right? It also could increase failure rate, but that's your education. And
Exactly.
And hey, look, instead of taking $500 and doing that, why not do leaps instead?
Oh, I told you the Roth account is Leaps.
Oh, okay.
That's all we're going to do in the Roth. We're not going to do any more CSPs. We're just going to do leaps. Margin account, we'll do CSPs and CCs. And then we'll have a cash account for Mario's challenge for shares. And then we'll have that one baby account that's the $500 account, which will more than likely blow up probably 4 or 5 more times before I really learn that strategy. But you know what? If I blow $5,000 learning how to buy options and I actually learn it, it's well worth the money.
Oh yeah, I mean, there's no doubt that buying options pays more. It's just way more risky.
But it's not about learning. It's not about paying more. Steady income comes through the sell side.
Well, we're not talking about
But
steady income when you're buying options. We're talking about getting 10 baggers, right? I mean, the whole
It's
purpose.
just gains porn. Yeah, it's just
Yeah,
literally
it's
the
yeah,
post.
exactly. It's all
It's like
gains.
chicks on Instagram.
Mm-hmm.
So
But it's
you get the
also
consistent side
how you-
going, and then
So-
if
so
you
see,
can
for
get
example-
the big money making side going, now you've
But see, for
increased your
example-
profits 100-fold.
Exactly. And that's the point here, is that let's say, for example, we find ourselves going into another correction. We decide to sell more puts. We roll our current positions. Okay, fine, great. We did well there. But that doesn't mean that while we're on the way down, we can't learn how to buy the premiums to see further downside movements and make money on that side as well. And I was talking to Shark about this. Shark's strategy on how he determines where there's going to be a good squeeze for a breakout is something I want to learn, not from a buying perspective, but just from a charting perspective, because that helps our strategy as well. We can buy in the money and actually collect intrinsic value, knowing that a breakout is coming.
Right.
So again, it's you pay that market tuition. I think that market tuition, in my mind, at first I used to see it as losses. Now I don't. Now I see it as an educational experience. If I don't, I'm not going to blindly follow. It's not like I'm just taking Cal's challenge and I'm blindly following his plays. I get into his plays, and then, like I said, we had that correction last week. It shitted on all of his plays, and that's it's one of those things that's just unexpected. It's not his fault. It happens. It's part of the market. And if you buy options, you have to be prepared for that. But the plays that he's alerted, I like the chart the way that it looks. So I said, okay, let me try to get into it. And it just so happened it went against me. That's okay. But it's only $500. You put another $500 in, you try again, and you try again, and you try again. Eventually, you got to learn, and you got to pick it up, right? I think that's so important for anybody who's still on the line, that if you don't understand both sides of the coin here, again, retail investors are only going to do one side. I want to be the institutional investor who may only play the selling side of the house, but I know how the buying side works so that I can make those small, consistent 20, 30, 50, 100% gainers and just use that to add more money and more leverage to the sell side.
Leaps, baby.
Leaps are wonderful. By the way, NVS pumped up a little bit today, didn't it?
See, I told you, and you're like, nah.
Did you get in?
It's gonna
Did you get in?
fall. No, I didn't, because I took your advice.
But see, it didn't pump like 10 points. It pumped like
I know.
half
I'm just
a point
messing with
today.
you. I think it'll keep coming down.
I think so too. I don't think it'll fall all the way down to 79 though.
No,
I do
I don't
see
think so.
81. I do see 81.
I mean, I think it'll wick. It'll wick into it, but it's not gonna body
Exactly.
you.
I agree. I completely agree.
And that's when you got to get it.
It's hard to catch those wicks though.
I know. But if you, I mean,
Like,
honestly, even the day of the wick, that's when you get the leap.
exactly. I completely agree. You know
Leaps are
what else?
beautiful.
I realized something yesterday. Blink. If you look at the chart for Blink, I've been watching mostly on the 90-day, the yearly and the 180-day lately. That's all I've been watching. And it just so happened somebody sent me a screenshot of Blink on the 30-day, sorry, the 90-day on Robinhood. And I looked at it and I said, oh my God, we missed the perfect, I mean, the most beautiful cup and handle pattern on Blink on the 30-day, 90-day. Like the most beautiful. And you know how Robinhood makes their chart look so pretty with the candles. And I looked at it on Robinhood and I was like, oh my God, how could I have missed this? Then I looked at it on cost and I'm like, this looks so freaking juicy. I don't know how the frick we missed it.
You weren't in my lecture. That's why you missed it.
Oof.
I called it 2 weeks ago,
You-
and no one listened to
what?
me.
You know what? You know what, man? You know what?
And it's recorded, so if anyone wants to go like fact check me, they can. I literally said, pay attention to Blink tomorrow to see how it opens, and no one bought it. But as soon as Cal said it, everyone's like, "Oh my God,
Did you buy
Cal's
it, Mario?
a
Did you
genius."
borrow it?
No,
Did you
'cause
buy
I
it?
didn't trust myself at the time. You scared me.
He does
How
that.
did I scare you?
He does that.
You and Hostel have ruined so many of my plays because I'm so afraid of what you guys say.
Hey,
Why? What
don't
did I
lump me
say?
into his failures.
Pets. I was gonna get into pets early, and then Hostel's like, "No, we have to get it below 29."
Hey, look, it went to 29.25, right? I
would've
was going to
gotten
get it
in
at 29.
earlier.
Initially, it was 28.70 is what I wanted. Then I'm like, you convinced me to go for 29. So I'm like, all right, I'll do 29. I think that's fair. And it just never
Then
reached
it
it.
went to like 43 or 45.
Well, I mean, unfortunately, it doesn't work out the way we want it to. I mean, you know how many plays that has happened to me on?
I don't want to talk about it this
I mean,
month. I've
I
lost too
don't.
many.
I don't even remember the one that I
Bro,
missed by a
does
penny.
it make you feel better that I bought Boeing at 90 and sold it at 102?
So,
Sitting at what, 210 right now?
Well, here, hold
but
on. Let
Hostel
me.
bought Tesla at what, 300, or sold at 300.
No, I did not sell at 300. Come on, it'd be better than that.
You know what's really funny? Hostile, you remember Viapack?
Yes.
Viapack bought Tesla because of me at 300, and he saw that the run up to earnings, or to battery day, I think, and then the battery day failure, and it dropped down to like, I think it dropped down to like $320.
No.
And the guy,
350, I think.
no, I think it got, maybe.
No,
I think it got
it
down
was
lower than
higher than that. 307 was the bottom from the first time. After it split, it went to 307. Then the next time, I think it went to like 348, 350. I remember getting in at 351. That was a limit order that it did for me. So I was like, sweet. And I remember looking at the chart like, oh man, I just barely got it.
he panic sold right after that battery drop off. He panic sold at like 320 or 330. It made himself a total of $100 on 5 shares. And now he's always complaining to me. Get rid of your Tesla. Why are you still holding on to Tesla? I don't like Tesla. Tesla's a bitch. But I'm like, bro, why are you still salty about fucking Tesla?
Tesla's awesome. When's Tesla gonna fall again so I can get back in it? That's the
I don't see
question.
Tesla coming down lower than 750 right now, bro.
Man, look what it did last time. It hit 900 something. Went down to 615.
When it hit 900 before?
A year ago. Over a year ago. This time a year ago. It went exact same price from 390.
Yeah, pre-split.
It went from 390 to 915 and then fell down to 615 and then went to 1100.
But right now, psychologically, I mean, look at the support levels, dude. Even after the sell-off last week, it only dropped to what, like 780, 760? It's got so much support at that level, dude. Like, Look at it, man. It is freaking that support level is a rock bottom support. We break that, we're going down. I don't see us dropping below that level. Hell, if we drop below that, I'm buying 50 more.
I think we
I'll
do,
buy
bro.
50. I
You say that that's a strong support level, but look at the 3 points that make 900 a resistance level, or just under
oh, I
888.
know. I
There's
know.
more resistance at the top than there is
You
at the
see,
bottom.
you see what it's doing right now, right? This up and down 10, 15 point moves, bro. It's consolidating for that next level up. I'm telling you, it is. It wants
Maybe.
a stack, and it's gonna get it.
Maybe. Just saying, there's
I
3
think
resistance
so. I think
points
it's.
and 1 support.
I mean, yeah, you're right. You're absolutely right. I don't deny that, but I think it's just consolidating for that next level up. I think we're gonna hit that next level of resistance. We're gonna drop and reject. We're gonna hit it again. We're gonna drop and reject, and that third time is gonna be the boom through.
Maybe.
It's the usual pattern with Tesla. It hits a rejection, or it hits a resistance, rejects, hits resistance, rejects, and then powers through.
So here's the problem, though, that I explain to everybody is, you and I have 2 different opinions on this, right? And either one of us could be right? It's hard for us to determine what's really going to happen, right? So
Absolutely.
the way I look at something like this and say is, well, I'm never getting in anymore until it comes down to where that I think it should come down. If it doesn't, oh well, not interested. I just won't look at Tesla no more until it does the fall
Yeah.
I'm looking for. It's that simple. Now, a lot of people out there will look at this and be like, damn, I should have done this. I should have done that. Nope. You know what I should have done? Maybe hold shares longer. But beyond that, I mean, move to something else. Make money somewhere else.
I tell you, I say that all the time. Once you're out of a play, you can't look back on it.
Yeah, absolutely. It's only going to make you feel emotional and dwell.
Like Mario's feeling about his Blink right now.
And pets.
Do you need a tissue, Mario?
It's okay. I made enough money this month.
Oh, low-key flex.
I made a lot of money this month. I made a lot of people a lot of money this
flexing
month.
right now.
So I'm excited. I think people don't understand how much money we're gonna make.
I think Mario's made more money than you, FaZe, this month.
No, I think he made more money than me.
I don't
Because I
know.
missed Apple, and then he could afford that CSP on Beyond, and I couldn't do that.
But you bought shares of Beyond.
Are you talking about January or February?
Oh, I'm talking about January. But I profited so much for February already.
What do you DM me your profits for January?
Sure.
Yeah, I'm curious to know who made more money. Because the
He
thing.
has a bigger portfolio than me. That's not fair.
Yeah, but you got to remember.
Look, think about it. If I'm making slightly more from you than you with 30 grand, and you're making just as much as me with 15, then bro, you're being more profitable. Who gives a shit?
Right.
That's a good point.
Like from a money perspective, again, we're looking at percentages. We're not looking at dollars.
Very good point, actually.
Don't sell yourself short, Mario.
Hell yeah, bro. I mean, shit.
Okay. Once we do this challenge, people will see.
I was actually telling Mario last night, I think we should do a hybrid challenge. CSPs and shares.
That's too much. Most people don't even have 15K. Most people don't even have 15K. You got to remember that there's going to be people that want to follow this.
400. He got 495 people giving him a thumbs up.
It doesn't mean that they got 15K.
10% of the Discord.
It doesn't mean they got 15K.
I bet you they do. I think you're downplaying the amount of people who've got money in the server. I guarantee you, this server has at least 500 to 1,000 people who've got a minimum of 15 to 20K in their portfolios.
I'll
Well,
tell
I'm
you what, I put a thumbs up even though I don't have that much.
see in your
That
face.
doesn't mean that.
I have though.
Who just spoke? Who was that who spoke?
I
It's
do.
Coco Mojo.
Coco Mojo, you're on mute now.
Don't worry, I'll override his mute.
Thank you.
No, but that's my point. Is if we
No, I think,
do a
look,
hybrid,
I think you're right. I'm
To
not
be honest, I
denying
do
that.
have more than 20 in my portfolio.
Me too, and I want it.
I just want to eat.
Look, hostile.
there's
Look,
no way to quantify.
yeah.
Is all I'm saying. There's going to be people that don't have it, and there are people that do. The ones that thumbs up, may or may not have it. And if we do a hybrid style challenge, you're going to leave people behind, right? If you just do shares like Mario's doing, everybody can participate based off of percentage.
Mario, are you gonna tell people how many shares of each to buy?
Yeah, I'm gonna have to.
And break it down in percentage so that you can basically say if you don't have 15K, you can still participate.
Yeah. I'm gonna create a whole list and rules and stuff for them and make it as easy as possible. And I'm gonna try to stay away from the big guys for a while unless I see a good play, so that everyone else can still participate. But I mean, like if Apple sets up, or
Wait, so you mean we're not gonna put 50% of our portfolio in Tesla?
No, we're not gonna do that.
You're about to get muted.
Dude, there's people asking me for like timelines. I'm like, it doesn't work that way. I don't think they get it, but it's okay. They'll understand.
You know what, Mario? I might even stop doing CSPs for your challenge.
I really think, and this is the issue, like right now I have almost 10 plays open. If I work on 5 to 6 plays and put more money in those plays, we'll probably average around 5K a month. Like that's no BS, no no exaggeration, no nothing.
On
Like I think I
15K?
can.
On 15K?
Yeah.
That's
If you can do that, if
Wait,
you
that's
can
more.
do that, that
Most
is
of my
that
plays,
is amazing return.
give more than 30% per play.
That is amazing return.
Like go back and check. They've all ran up $3 to $5 per play or more.
Because I am netting roughly around 35 to 4K a month right now.
Like
And that's using more leverage.
Look at these past plays that I did, and I was impatient on a couple of them. Ross did exactly what I said I was going to do. SDSC did exactly what I said I was going to do. XL did like all of them. If I would have put more money in them, man, we would have made a lot more money. But I do it safely. But I kind of want to show people the possibility, so I'm going to go a little heavier on the first month.
Do it.
Mario low-key flexing through our through this time right now. You notice
Telling
that?
you, shares is
Low-key
where you
flexing.
make the money.
Oh,
I guarantee you.
Man, he's humbly flexing right now.
I'm telling you,
I told
FaZe,
you, bro.
once
Mario is
once the challenge is over, they're all yours. You can have them all.
If you're doing that, then shit, I'll give up my stuff, bro.
You know how much we're gonna change people's lives with this play, with this.
Bro, that's the point, right? Like, it doesn't matter who makes more, who's more profitable. You know, at the end of the day, bro, if people are making money and learning in the process, and again, I really want to get people to change their mindset, because I think that's the biggest thing here. You know, you've got this mindset of shares. I've got this mindset of selling options and shorting, versus this day trading, quick money, get rich quick type of mentality. If we can get out of that mindset and get into that institutional mindset of making money hand over fist through an easy way and allowing time to be your friend versus time, ruining you, it'll make all the difference in the world.
It's a game changer for your life.
Exactly.
And there's, again, we're not saying anything's wrong with buying options and scalping. We just think that it requires a lot more knowledge than most people are led on to believe.
Give credit to.
Very true. Most of my
Somebody was talking cut out.
No, I did the math, Hostel, and there's so many things you need to learn for options, and I don't think people consider it. Like they just don't.
Well, I mean, that's what I'm saying. They're led to believe that it's simple and it's easy and you can make a lot of money. And while some of that is true, there's a lot more intricacy to buying options, right? And that's where people start. When in all honesty, that's where people should end up.
Yeah, I agree, man. Yeah, and that's what I've told people before. And they're there, they're learning.
So when are we starting this, Mario?
I think in 2 weeks. I just need to close out a couple plays. I don't want those affecting the challenge.
Mario, you plan on giving a heads up so people can clear up positions and fund their accounts?
No.
I mean, I kind of already did. You know.
No, you didn't. You just said who's interested in this.
Oh no, but do you want me to put like a formal statement? I'll do it.
I mean, if you had a conversation with Anthony and Tilio about it, then yeah, you need to.
Tilio's okay with it because he'd rather have kids YOLO in shares than YOLO in options. And I feel the same way.
All I'm saying is just get the formal nod of approval and post a formal, hey, we will be starting this challenge on XYZ date. So that people can prepare and actually get their accounts ready. Hell, I'm not ready. I don't have an account with 15K sitting right now. I mean, I do in my margin account, but that's because I'm doing my CSPs there. So
I got
don't have anything
12,000
prepared.
ready.
I'm the same way. I got to sell my
You
Tesla
guys
first.
kind of got me excited.
I got 12 grand
What
ready,
kind of
Mario.
Yeah, I mean, it's simple, guys. Like, you just sit back and relax and watch the money come. Like,
Mario came into my lecture at the last minute, flexed his way in, and got people hyped on shares. Can you believe that, bro? Can you believe that?
He's a better salesman than you.
He acts like a saint, but he a devil in sheep's clothing.
Wolf. He's a wolf.
Whoa.
No, I love you, Mario.
Love you too, brother.
Have you guys seen the news that just Robinhood released it?
What now?
Robinhood, they just took the limits away from AMC and GME right now.
Yeah, of course they did. Now there's no need to put the limits on there. Now all the shorts have covered. They don't care.
Do you think AMC will ever go back to the 20s or like the double digits again anytime soon?
Maybe.
It's had its time.
Pushes it up.
I think it's had its time. I mean, ask yourself this. Matter of fact, do this. Go to the nearest AMC theater and you tell me there's people there.
They're closed.
Reality. Yes, I'm saying reality says that they're not going to do that. Wall Street bets maybe say it. Maybe they'll make it happen again. But reality
this is what I'm betting on. Like, it's just the hype, it's not the company itself. Like for example, GameStop is not worth that money that it actually got. Like people got a lot of money from GME, but it's not actually worth it. Like the company itself is shitty.
I don't think it was worth $14 when it was there.
Right. Yeah.
You know, I read an article that for every one person who made money on GME, over 62 people lost money. For every one person who made even $1 on GME, 62 people lost money.
That's pretty wild.
Wall Street bets made it seem like everybody was printing money. There are people in this Discord who are bag holding shares at like $200, who reached out to me. I know they've reached out to Mario. I know they've reached out to Hostile, asking what should I do.
I have a kid down 2,800 on AMC shares, telling me what do I do.
Shit, I know a person that bought GameStop at 380.
Oof.
See,
Ooh.
there you
Ow.
go. There you go.
I'm for.
Ouch.
I'll give you a perfect example. One of my best friends, guy who I've known since since I was a kid, he decided to get into day trading with stock right when GME, BB, and AMC exploded. And the one stock I told him to buy was CCIV. I told him to pick it up at 14. He got FOMO and picked it up at $26 or $25. And then it dropped down to 22, and all he saw was red in his portfolio. He's still holding on to AMC, BB, and Nokia. He cut your CCIV at break even, and now CCIV is sitting at 30. He's FOMO'd out of that, and he's still holding on to those, and he's down like $900. He's like, "How do you do this?" I'm like, "Don't look at meme shit." Oh, and on top of that, by the way, he probably lost like $200 on Dogecoin as well.
It's doggy coin, man. Get it right.
I call it dog shit.
Somebody posted a meme about it. This country ass dude talking about doggy coin. He's like, "Get you some doggy coin."
Is it really doggy coin?
I don't know, man. I have no idea.
No, it's
I've been calling it
Doge.
Dogecoin.
It's Dogecoin.
Dogecoin.
Hey guys, from your perspective, so I really don't care that I'm like for.
You cut out, buddy. You don't really care, and then you cut out. Is what we heard.
I made 150% on GME.
Hey, congratulations, bro.
Yeah, because Robinhood gave it me free. That was $2. I sold it at 250.
Hey, that's awesome, man. Congrats. I'm glad you got out of it when you did. Really am.
Yeah, it was a free start.
Don't get me wrong.
When I signed up Robinhood, they gave it to me.
That's fantastic, man. I'm really happy for you. That's awesome. The fact that you actually profited on it, that's awesome. I don't condone it because I don't condone meme stocks, period. But the fact that you profited on it, good for you, bro.
Virtual high five.
Yep.
Hey guys,
So sorry guys, I was
one
cutting.
question.
I didn't do my microphone right.
Oh no, you're good, buddy.
I was gonna tell you that I'm down 4K and a half in AMC, but I didn't care much because I did make that money back with MVIS. But I was thinking if I either should maybe get like a put option and maybe spend 2.5K and save the other 2, or should I just wait until it goes up, because I do have patience. Like I don't care. Like I could wait even for like another couple months.
I'll be honest with you, man. With the IV as high as it is, IV is going to deflate on it, and you'll end up losing that too.
Do not
What was
buy
that?
options on that.
I was so I think there's like the kind of option that I'm trying to do is that one that would allow me to sell my sell my shares at the strike price that I choose.
You want to do covered calls.
Right.
So
I mean, there's nothing wrong with that, but the IV is going to deflate. You're not going to get much premium soon after.
Right.
But it's not a bad idea. I mean, if you're bag holding it anyway, then yes, sell calls against it, at least bring your break even down.
How many shares you got?
I got around 480 something.
So it has to be
478.
So you can only do 4
20
contracts.
more.
Yeah, it only could be about 400.
No, I would buy 20 more shares. If you're already holding that much, buy 20 more shares of it, and then just sell calls, 5 contracts, weeklies or monthlies.
I take calls.
Yeah, sell calls.
Oh, sell calls, yeah.
Yeah.
And that could save me at least 2K, right? Instead of, because I think
I
I
don't know
saw
if
it was at 600.
No, I mean, if you sold calls right now at the money at $7 strike on February 19th, you're looking at, for 5 contracts, 162 times 5. Or no, I'm sorry, 156 times 5. So I mean, you can cut that loss into a quarter at the money, but if it pumps for any reason from now until expiration and it stays in the money, your shares are gone.
Right.
So it's a tricky situation, unfortunately, because it's a meme stock. They might pump it again, and then you'd be in a really bad position. I mean, I don't know. This is one of those where I'm like, I kind of throw my hands up, and I'm like, I don't even want to give
What's your
advice on
break
something
even on
like
it?
that.
I mean,
What's your
I
break
kind
even
of
on the shares?
can just like wait until they go up to 9 maybe and just sell them and save all the 4K. But or should I just wait? Because honestly, I don't mind waiting, but I just want to know that I'm doing the right thing. I'm not freaked
I
out
think
about
the
it or
longer you
anything.
wait, the likelihood is that it won't go there. I really see AMC going back to $3 sooner rather than later. To be frank and honest, what's your break even? $9.
What was that?
Your break even is $9.
Oh no, man, mine is high 15.
Ooh.
Fuck.
Yeah.
Well, I mean, you can make
Let me take a look.
$35 per contract on that. So I mean,
It's just not too bad.
I mean, it's still not gonna make up for the loss, but 35 times 5, you're looking at 175. I mean, it's kind of sucks. I'll be honest.
Yeah, it's cool. I mean, like it happens. It happens. But I did. I mean, I did made pretty good money with MVIS. I've had MVIS since they were $4, so now they're at 10 something, and I had 2,300 shares. I made pretty decent money. I did make money with Dogecoin too because I had it 2 months ago. Forgot about it, man. And then I got into it today, and it was pretty good money. So it's okay. Like I made the money back, but I just don't want to make a stupid decision after the stupid one that I made. Yeah.
Well, definitely don't repeat mistakes. Learn from them.
Yeah.
And if you're overall up on your portfolio, at least there's that. So it
Yeah,
sounds like you are.
Hold up. Let me check real quick. Let's see how this month. Yeah, I'm pretty up. I'm 14K and 277 up.
So it's not the end of the world. I mean, you could honestly maybe sell calls out the money. I mean, what? At least you're gonna make back a quarter of that money, right? In
The other thing
15 days.
Yeah, other thing you could do is if you can sell a couple calls on it just to break even, bring your cost basis down. If you're seeing that much profitability month over month, then sell the shares at the end of the year just to take a tax write off on it, take a deduction on it.
Yeah.
Yep, that is an option. That'll
Right.
lower your cost basis as far as tax requirement.
Right.
Like
How's that?
that's the same thing I'm doing right now with the QS. Like I'm just selling calls on it and just trying to make the money back on the QS. I got it
When
when
you
I
gotta
was like,
find that.
yeah, I got the QS when it was like 95. Now I'm right now
Ooh.
89. So slowly going down. But yeah.
Be careful.
You
It's
can
coming
make
up.
something. Yeah, it's coming up. Yep. I sold it yesterday because it was going up. So I was still making I still make like $100 on it when I sold it, when I buy it back. So I'm just gonna wait to see if it's gonna go more
What
up
call
or
did
not.
you sell?
It's just like
What
it's
strike did
far
you
away
take?
in the money.
You mean out of the money if you're selling
Yeah,
calls?
out of the money, yeah.
What strike?
What strike?
Yeah.
Let me see. Where is my QS here? So right now my average cost like it was 89.50 and I sold the 45, and when I like buy it back it was like 47 something.
So you took a loss on the call?
No, but I just made like $100 on it, not much.
Okay. So you're not in a position right now for QS?
I am in the still position.
Not sure. You're not in the option position.
No, not in the option. No, not anymore.
Hold on. Let
I
me see
sold
if I can
it
take a look
because
at the
I
chart.
thought it's gonna cross 50, 55, and then I thought I'm gonna sell it again. That's why I buy it back. I made like it was $98 on it. Like I was happy with it because I've been in down QS for like when I got the QS when it was, let me see, I got it back on December 25th. So I'm holding it since 25th of December. 24th of December actually, I think. Was something around that time.
Something safe you can do is
Sell the 60 call for February 19th.
that's a resistance level.
Yeah.
February 19th.
Yeah, February 19th 60 call is giving you $2.55 in credit.
60 call, let me see.
And that's going to give you $18 a day.
$18 a day?
Yep.
Yeah, that's pretty good actually, $18 a day, because it is giving me like what, 250, 260 right now?
255.
255, yeah.
255. And if you can catch, because QS was actually up to like $50 today, and it faded out.
Yeah,
I think we'll see that same thing. If you can catch that quick pump, you'll probably get like $3, close to like 3.25 tomorrow if we can get that pump in the morning.
Like right after the market open, or should I wait?
Yeah, right at market open.
Okay.
Because
today
QS does that. QS pumps in pre-market and fades out throughout the rest of the day.
So something else you could do is once it gets to like $70+ area, 73. So there's a gap right at from let's say
right at 85 down to
85 down to $70. That gap is very highly or potentially going to get filled. So what you could do is when it does get there, sell out the money, and you're gonna guaranteed make profit no matter what. It calls the shares.
Yeah, because I'm looking at 60 call right now. It went like high up to 390, and then low was 240 on it. So it was pretty good money for one day, even if you see that way. If you sell it at 380 or 370 and buy it back on 240, 250, it's still good money for a day.
Yeah, you can do that too. I wouldn't necessarily suggest day trading it, but I mean that you could certainly do that if the price action is there. I really think that 60 is a really strong resistance for it. I think if you sold the 60 call for February 19th, I think irregardless of whether you see a pump or dump, I think you're going to be able to collect 85 to 90% of that premium prior to the 19th.
Yeah, because I don't trust QS anymore. I think the QS
I
is
wouldn't
gonna
say that just yet. I think it's I think it's starting an uptrend.
It is. I also agree with that.
Because when I
think
bought the
it's starting an
QS,
uptrend.
I thought it's just gonna go up and up because that company is is a future company.
Nothing never goes up and up. Remember that. Nothing, except for Tesla.
That's what I thought, because it's a solar company, right? The QS. So I thought in the future, maybe in a month or so, it's just gonna go consistently up, maybe $3, $4, $5, But it went from when I got it on 20, I think it was 23rd, 24th. After 31st of 1st, it just gonna start dropping, and it was really bad.
So
yeah, no. If you look at the 30-day, it created a cup and handle, and it pumped up to that fifth. We broke through that 47.88 level, and then we came back and we retested that, and that became new support. And right now, I kind of see a flag forming as well on the multi-day, on the 5-day. I wouldn't be surprised if we break through 50 again, and 50 becoming a new support for us. And if we do, I think that'll be a confirmation of a solid uptrend.
I hope so.
Are you guys familiar with MVIS, Microvision?
Yeah.
What are your thoughts about the company?
What do you mean, from a technical standpoint or from a fundamental standpoint?
Technical.
I haven't looked at the chart in a minute. Give me a second.
It's at all
Had
time highs.
MVIS and for a while.
Yeah, it's at all-time highs right now. I don't know, man. This is running all on hype, though.
Yeah.
It's running on the potential of being acquired by somebody sometime soon. I've read that Tesla might acquire them. I read a bunch of reports. I think it's all just hype, and that's what's causing it to pump. From a fundamental standpoint, the company is shit. They're almost a bankrupt company. Like, I wouldn't invest in them for a damn. But from a technical standpoint, I know Cal and Zabes, they focus a lot on technical analysis, and I know both of them made really good money on MVIS as well. But fundamentally, it's trash, and I wouldn't play options on it. And if anything at shares, I would consider picking it up maybe at 6.5. But outside of that, I wouldn't touch it because right now, I mean, again, same thing. If you look at the 30-day, I don't even know what time.
They do, I think, have a presentation for their first physical product or technology, which is, I think it's in April. And there weren't actually like any serious news coming in the couple of past months about it. There were like some, like rumors about the company being bought from several big companies, like you said, Tesla, Microsoft, even Apple, even Ford at the time. Which is why it went up, I think, to 9 and then to 10, and then it came back down. And it just started running again last week, and now I think it sits at an all-time high, 52-week high. I'm up, I think, around 9K in it right now, but I'm thinking about if I should sell or not because I was down 4K in MVIS and I never sold. I waited until this time, and I don't know if I should sell right now or wait until they do their presentation.
Are you up?
And the hype maybe gets bigger. Yeah, I'm like.
Percent? How much?
Why don't you pull out your initial investment then?
I'm 8K 720 up.
And how much is your total investment initially?
I think it was 11K something.
So right now the position is worth about $19,000.
Right now, yes.
Net liquid is worth about 19K. I mean, if you're up that much, I would consider at least trimming half of your position or a quarter of your position.
Did.
So that
Not the half though, because I did have 2,300 shares. Now I have only 1,700. But I didn't sell at 10. I sold at 870.
So I think you can see if they've got this presentation come up, which I'll be honest with you, I haven't heard about it. I mean, I'm looking at the 10-day. I see it potentially flagging. I wouldn't be surprised to see it run potentially to 12 to 13 bucks on the run up to the presentation. But I'm a true believer in buy the rumor, sell the news. So if that's the case, if you see a pump on it, I would probably trim. If you got 17 left, maybe another 700 to 1,000 shares hostile, and then letting the rest ride and see where it goes, and just putting a trailing stop on it.
I would put a trailing stop on all of it. To be honest.
Trim it?
No, a trailing stop. So if it continues to ride, the stop loss is going to follow it upwards. Right. So put a trailing stop maybe somewhere around. Let's see. Let me hold on a second.
I'd say 2 points.
I'd say put a trailing stop. Yeah, $2. So as let's say the price jumps to 14, and then it falls, it'll stop you at 12. Or if it falls from where it's at, it's going to stop you at 888. Or I'm sorry, that was the high. It's at 1017. It'll stop you at 817. So there's two wicks that I'm seeing here, 869 and 880. I mean, that's where I would like to stop out if it were me. So I mean, you could probably potentially say something like $1.50, something like that. Maybe sell some more, sell another 700 now, and then let the last 1,000 go with a trail and stop.
That's what I would do.
Because I mean,
Personally,
it's
that's
still
what I
up there, right? And there's no harm in taking profits. Nobody ever went broke taking profits, right? But if you
That's true.
hold, it might not work so well, right? So I mean, worst
Yeah,
case
I
scenario is you take profits. You know, worst case scenario for you is you take profits and it continues going up, right? Let's say you sold all
Which is
your
not too bad.
shares. Yeah, let's say you sold all of your shares and you made $9,000. That's a lot of
Right.
money.
It is.
That's a big profit. So me personally, I would be completely out of it. But if you want to continue to hold and try and get more, bleed more profit out of it, sell some more shares, hold hold the last 1,000 and put a trailing stop on it. That way, if it does fall, you're still going to make money off of what you got in it.
If you sold another 500, would you be? Would all your initial investment be out?
If I sell another 500,
Yeah.
no, I wouldn't think so. I think I have to sell more probably.
So you
My-
put.
Hold up, let me go for it. What were you gonna say?
How much? What was the initial total investment? You said 9,000, 10,000?
I think 11 grand.
Yeah. So
11,000.
at the beginning, okay, let me count it for you. So now I have 1,700 on 6. Yeah, I have 11,815.
So you're not going to be able to get out of that and cover your profits or your initial investment, and then see it run some more. Like you're not going to be able to sell everything you got and cover your initial investment, right? Because you're only up 9,000. So
right.
You're not going to cover what you got in it.
Yeah, but he also trimmed 600
I also
shares.
trimmed though. Yeah. I sold so from 2,300 minus 1,700, that would be 600 shares. I sold them with a profit, I think. They were at 860. That was 500. Yeah, so I'm already think around 1,200 profit from the 600 that I sold already.
So 1,200 plus 9,000, that's 10,200. You got 11,000 in it. It's not
That's
covering
almost it.
It's not covering it.
No. What are you comfortable losing?
What was that?
What are you comfortable losing?
Oh,
If you were to lose.
You
I mean,
won't.
if I were to lose,
You won't. Do a
which
trail
I
and stop.
won't, but
There's no such thing as losing.
I'm not saying that there is, but I'm just saying, look, if you're, because I get what you're thinking. I completely hear what you're saying. I think that with it hitting all-time highs, with the potential rumor coming up, this presentation coming up, I wouldn't be surprised to see 12. I wouldn't be surprised to see 13. 10 is a big psychological number, which is why we pulled back a little bit from all-time highs. Looks like it's consolidating for another leg up in after hours. I wouldn't be surprised to see it even gap up tomorrow. If it does, I would highly urge you to trim and then put a trailing stop on the rest. That would be my suggestion.
I would probably do that because, as you said, like I don't believe that I'm gonna lose any, especially with the presentation coming up, because now there weren't any news coming in. Like the company just like going up by itself. Like I don't know, there's a lot of institutional buyers that came in last week, which is why I think the price kind of went up a little, and also maybe the hypes. Like people are talking about it lately a lot. But since the presentation is coming, I mean, the worst thing could happen is probably not break the 11 or the 12. And then if it
When is
didn't
the
break, then I'm
presentation
probably gonna
again?
sell mine on 20. I think it's in April.
So you got to remember though.
Oh,
So
April.
yeah, if it's in April, you got 2 months. There's no way that that's going to keep running for 2
Right.
months.
Yeah, and
There's
I
no
already have
profit
it for
taking.
2 months.
Yeah, there's gonna be profit taken, man.
Yeah.
I really urge you to trim some more shares, and then keep a rolling stop or a trailing stop, or hell, even keep a stop limit that, like, if you see it pumping up to 12 and then it starts dropping down to $9 or $8, that you just stop out of it, just to cut your loss, or not cut your loss, but at least get your money out. And if it does break back down, then you can pick shares back up to play that rumor up to the presentation again. If you don't want to do a trailing stop, because sometimes you can get a slight drop out of it, it hits your trailing stop limit, and then you get stopped out and it pumps back up. So you could also do just a stop limit and just put a stop limit in at like $9 to say, hey, if it drops down to this level, I'm out and I can buy back in. But I do anticipate profit taking.
You could still set a trailing stop to stop you out at $9. Right? I mean, it's a trailing stop is a stop. The only difference is if the price pumps, trailing stop goes with it.
That's true.
If you set a trailing stop right now at $9, it's going to stop you out at 9.
Wait, how much profit do you have right now?
Said 10,200 if you sell
So
everything.
you're telling me you're willing to risk $10,000 for how much more potential?
On the price target, Shark said it's gonna be around 20, around March, April. He's not the first one who said that, but I don't know, man. I don't believe it's gonna go up to 20, but I mean, if it goes to 15, I'm good.
I'm just asking you, are you willing to risk $10,000 for an extra 5K?
I don't know, man. I mean, if it goes down to 9, that would be my stop. I'm out.
Then say it right now. Put a stop less than $9 and let the rest run.
Yeah, I mean, I do have a stop limit on 9, 15. I'm not willing to go down because I was down in this for a long time. I'm just
Exactly.
happy to
So
see
why
that.
are you? Yeah, exactly. So why would you risk another 10K? That's profit.
Yeah, just do the trailing stop at 9:15, and you're done, right?
Yeah.
Right.
You're gonna make money.
It's simple.
You're gonna take advantage if it pumps, and you're gonna make money if it dumps. So
Right, so it's a win-win
win-win
situation.
Yeah,
Yeah,
it's a
man.
win-win.
Like I said, I mean, the worst thing could happen is I get out and then it pumps up, which is not too bad because I already have almost 8K profit, so I'm good.
Exactly,
Yeah, but you can always buy back in, dude.
Do you see it going back to the 690, 670 range, or?
It could.
Who
You
knows?
got 2 months until that
Yeah, exactly.
thing. Yeah, I mean, it's way
It
too much
very
time.
easily can.
So let's say I did sell, and I would have kind of money that I would like to invest in one place and try to play with the rest. So I want to have like my portfolio 70% in a good company for a long term, even if it's the slow growth, and then the 30% I'll be playing with either if it's options or like penny stocks. What would be a good company?
I would do the other way around.
30% and play with 70?
I wouldn't say play. I don't like the word play, but if you literally flipped with 70% of your account, you're fine.
The only reason that I actually said 70, put them in one place, because I've been in the game for like almost 4 months, so I still don't have much experience. I would rather play with less money, as you said, not play like invest less money than
bro,
big money.
it seems like you have money, man. Literally follow my challenge in these next couple months. I promise you won't regret it. I can say that with a straight.
What is it going to be? I didn't hear about it. I just heard you talking about it earlier.
It's just going to be shares. It's going to be safely trading shares.
Yeah, I don't like options, man, to be honest. Oh, I forgot to tell you something, guys. The AMC. I did tell you that I'm down 4K, right? I had an option call I took it when it was $4. I forgot about it. I only had $70 in my account, and they were bothering me. I was like, you know what? I'm just gonna spend them with something. And I took the 7 call of the AMC. It was $35. I woke up the next morning and it was 4,000% up. I sold that shit for 2,600. So I forgot about that. So basically now I'm down 2K, not 4K.
Good.
Hey, you guys think Apple will go up in next few days since they are changing the privacy settings?
I don't know.
No idea.
Like the team spokes, like in the next the iOS beta they're gonna launch, they're gonna change the privacy settings. Now we can select whom we can share the data with or the tracking. Like inside the apps we can turn it on and
No,
off.
and I don't think that's enough to fucking make the stock go up. Not
I think
Apple.
so.
Yeah, I think you're grasping at news with that.
I will say though that I am short term. I am bullish on Apple. I think we're having a hard time to break that 138, and that 138 seems like a nice resistance level. If we break that 138, we'll continue to run. But I don't think it's going to be on privacy news. I think it'll be based on that Apple, Apple Car deal with Kia and Hyundai. I think that's what's going to make us break. I don't see it necessarily today, tomorrow, or the next day. But yeah, short term definitely looks bullish on the chart.
I want to buy few couple calls of Apple and hold it for at least for like a month or two. What strike and what date should I choose for that?
January 2022 at the money.
January
I'm already
2022.
Telling you, I made a G off of that. So
Hostile, did you get in the leaps?
I haven't got. I sold my Apple Leaps a week ago. I made $1,100 on that particular expiration. So
But it came all the way like 131 or somewhere 130 there, and
no,
you said
I
that you
didn't. I
are.
didn't get any more. I should have, right? But I'll tell you like this. Hold on. Let me redraw my trend line because it's a little bit different now.
Like if I go with the January 2022, it's like costing me a lot.
Yeah.
Like even if I go with the 140 strike, it's like 1885.
I expect Apple to come back down to like 133-ish.
130.
134.
Yeah, 132. All those gaps to fill at the bottom.
If we're lucky, yeah, it'll come back down to there.
I'm agreeing with you. I definitely think it's going to 132.
Yeah. So when it does, that's when you buy your leaps. And I guarantee
Didn't it
you,
come?
if you buy leaps in January 2022 at the money, okay, and let's say it comes back down to, so the leap is 135, 130. Those are the strikes. If it goes to 132, you're going to see that cost around 135 is going to cost around 18 to 1750, right? And then the moment it comes right back up to 140, you're going to see $500 off of that one contract.
And
Yeah.
can you sell covered calls against it?
I mean, you can.
Yes, you can.
You can, yeah, you
I
can.
wouldn't.
I wouldn't either. I
No,
would just.
Why not?
also, it does look like it's making a couple handle on the.
Yeah.
I mean, I would. The leap is going to throw a lot more money in your direction than a calendar or a diagonal, because that's basically what you're talking about doing. So, I would just go with leaps with Apple.
Do you think that 135 one will go to 15 or no?
35 strike go to 115?
Yeah, maybe in like a week or 10 days.
No, I don't think so. You're going to see that cost probably at the lowest 1650. I mean, it depends on IV, right? And IV is kind of low, so I don't
it's really low.
I don't necessarily see IV dropping all that much. I think
it's
going
like
to probably
38
hover.
right now. It's like
I
38,
have
39.
150.
Yeah, I think it's going to hover, honestly. IV pumps with uncertainty, and I don't see any uncertainty with Apple. All right, if anything, IV might drop a little bit, but I'm telling you right now, it's going to follow
The
this
biggest
trend
pain
line.
in the ass with selling covered calls in Apple. The IV is so low, you don't get any premiums off
Yeah,
of it.
it's worthless. I mean, it's not worthless, but you're
Should we
better off.
supposed to buy this low IV, like less than 40%?
Always buy
Yeah.
low IV. That's what you want.
But that low is like I thought like low means like 50 to 100 or 50 to 70, but
That's
I never
high.
buy. That's high, 50 to 70%.
Yeah.
Okay.
You want to get it
I
low.
love IV. I love IV that high because I can sell
Yeah,
extrinsic
usually I go
for
IV with
so much
between
crap.
50 to 120. That's how I see it, 50 to 120.
That's good for the output.
Yeah. It's beautiful for selling premium. But
Yeah, but I never did the leap before, so I was like, let's just try one with a steady company like a Apple.
Yeah, I mean, you
Because
can't go
I know
wrong with
you
leaps if you
always
catch them
talk
at
about
support.
leap.
you catch it at support and you buy leaps out the money, it's guaranteed money. Guaranteed. Guaranteed money. Like, I mean, even the open interest is phenomenal. At 130 and higher, there's nothing there's nothing under 8,000 until you get to 185. I wouldn't go out of the money. You're wasting your time. Buy at the money. The
Yep.
OI is there. The bullishness is there. You sit on that for a week, you'll see $250. Some people are like, well, it costs so much. Honestly, 1,800, it's really not. Not when I can make
Yes,
$250 to $500 on it.
that's true.
I mean, you go out there and you spend $500 on a contract, you'd be lucky to make $250.
I'll also say it's cheaper than buying the shares equivalent to
Absolutely.
what it would cost to even make that money.
It's 7 contracts per, so for 100 shares, if you bought them, it equals out to be 7 contracts. I already done the math. So when I made $1,100 off of one contract, had I put in 100 shares worth of money towards contracts, I would have made $7,700.
I wish like in November I bought that I think it was 19 March call for 120, the Apple call. I bought it for $5. It was like $5 the premium, not the premium, sorry. I feel sleepy. So I bought it for like for $5. I just wish like I hold it. I sold it for like 650 or 7 something, and it went up to 25, 27 something.
It
Welcome
happens.
to the club.
You made money though, so that's all that matters.
Yep.
Yeah, I made like 100, $200 of it, but I just wish like I should have hold it.
Dude,
See,
welcome to the club.
This is the mentality piece that FaZe was talking about.
Yeah.
You can't wish you did something differently because it's gonna haunt you. You got to be okay with the decision you made. As long as you made money, you have to be okay with that.
Oh yeah, I did make money. It was like 200 was pretty good for me. But sometimes like that was like I bought it in November, the March call. I
Here,
shouldn't
I'll
have
give you
sell
2
it.
examples where I'll do you. I sold work 3
Beyond?
days before its merger with CRM, and then I sold Beyond 5 days before its deal with Pepsi. So you tell me who lost more money.
Well,
That's right.
It happens all the time.
I had 75 shares of Tesla, and I sold them all in the 600 to 650 range. Had I held them till 900, imagine how much more money that would have been. With
Exactly.
75
It happens to all of us is what I'm trying to say. And I promise you it'll probably happen to you again.
It's not probably, it will.
It guaranteed will.
Guaranteed will.
And it's
Guaranteed.
okay
It
because you
happens
made money.
every other time, right? Every other time I
Yep.
get out of something, I'm like, shit, It just
It
ripped
happens with
more.
me with the AMC. Like it happens with me the AMC. I sold it for like it was around 450 or 470 or 460 something, and it went up to like what $14-15. I
Look,
had like 300 shares of AMC.
nobody can argue with the fact that, like, I think I've got it worse than anybody because I bought GME at 290 or 287.
Oh
$2.87.
wow! Wow!
You know, and I had 2,000 shares. So think about that.
Wow!
How much money did I miss out on? And it sold at 4. And you know what? I'm not mad because I made money, and I made good money. You know,
I think you're mad.
I'm
I
not.
did.
I'm not. I'm
Uh,
No, he's not
happy.
mad.
I'm
when I
totally
see the
happy.
GME around 300, I
No,
didn't
hostile,
use
you
the.
are.
Now, when I see the GME for like around 300, I didn't did any trading for 2 days because I had the GME for $35 and I sold it for 47, 48 something, and it went to 60. I didn't really feel bad around that time, but when I started seeing the memes and like on Twitter around when it was above 300, man, I was like depressed.
I mean, I get it. I get it. Right? It's an emotional roller coaster, especially when you could have seen massive profits. Right? I mean, way back when Netflix was $20, I had $5,000 and I wanted to buy Netflix, but I chickened out, and it went up. It went to $300-400. Um, when all the airlines went out of business, or the first time when they really had a huge trouble, and like Continental got bought out and NWA got bought out, some of that stuff happened. Delta Airlines went down to 25 cents. This is when I had my $5,000. I could have bought them at 25 cents. Look at the price they're at now.
Wow.
$5,000 worth.
I'll give you the flip side of it. I had 200 shares of Helion that I did. Fuck you. I had 200 shares.
I did all that. I did all that. I bet everything at the deep.
200 shares of Helion that went all the way up to $58. And I said, no, it's going to keep going. It's going to keep going. And then it started its downtrend. I still have 200 shares of Helion. It's at $16 right now. So don't think for a second that the market won't turn around on you, because it will.
It's at 15, by the
Don't-
way. I just need to, correct you on that one.
Yeah, I know. I'm just selling your call. Fuck you, bro.
Well,
Hey,
look,
hey,
I got one
won't
for
forget
you.
Beyond if I'll forget Beyond if you'll forget Helion, bro.
I got one for you.
Well, I'm
How
gonna
about-
buy Helion, and I'll make money off of it while you're still
Ooh.
holding it. So
Oh,
That's
you gonna
salt
do me
in the
dirty
wound.
like that?
that will be the first stock of the challenge. That'll be the funny part, and then you'll have to buy it again.
Salt in the
Come
wound.
at me like that, bro. He gonna come at me like that, bro.
Shit,
I feel
look.
you. I see you.
I bought penny stocks at 2.3 cents, and I put $5,000 into it, and then it went down to 0.0002. So my $5,000 went to $200.
So what you did with it?
I got fucked. It was years ago. I made a huge mistake in penny stocks, and a hedge fund was pumping it. What in reality, what was going on is the hedge fund was pumping it. People were buying in, and they were liquidating their shares, and then it just fucking tanked. Kept tanking. I had like 7 million shares at one point because I kept throwing money at it, and it just kept falling.
I'm scared, like investing in the penny stocks. Like
Oh, that's
anything under $1, I'm really scared.
yeah. I won't
Like
touch it.
only penny stock I made money is the the doggy crypto, the Dogecoin.
Man,
Yeah,
it
Doug is
burned.
Only one I made a good
Doug is
money.
gonna make us rich, man.
I made like $1,700 in a Dogecoin last week, and I would say like that's the only something penny stock I made good money in it.
Shit, matter of fact, when I look at the 10-year chart on this penny stock that I got crushed on, you can see this monstrous wick where the hedge funds pumped it in 2012 is when I bought it, and it's all it is this monstrous wick up to 0.22 basically, and then everything else, all the bodies are down underneath. Let's see, under 2 cent, right? So the hedge funds pumped it to 22. I didn't get in there at 22, thankfully. I mean, it doesn't really matter. I got crushed no matter what. I got it after they did all that pumping stuff, I think is when it happened. I don't remember. I just know I got crushed, and that's why I don't touch penny stocks, because it's highly manipulated. And if anybody tells you anything differently than that, they're lying to you.
What's the worst stock you have ever like lost money in it?
That
Like a
one.
lot of
Kellyanne.
That
that
one.
one.
I mean,
Mine is
well,
Nikola.
Kellyanne.
I didn't lose money. I had IDX for like 6 months, and I held it for 6 months, and I eventually made money. I made $30 off of it.
Wow.
Are you willing to hold the stock for 6 months?
I held that one for 10 years and said, fuck it, I'm done.
You held it for 10 years?
10
Shit.
years.
Got some patience.
2011 is actually, that's right, 2011, because I remember it was right around the time I bought gold and silver at the high of gold and silver. And I got crushed on that. So I bought Barrick Gold, which was ABX was their ticker symbol at the time. And they were at like 60 some dollars. I bought it there and the shit dropped to 30. And it just kept going down. It hit $12 at its low. And that's when I doubled up on my position. Just, this year I doubled up on Barrick Gold. And at one point I was up a couple $100. Right now I'm down $200 or $300 on it still. But, that's 10 years I held that crap. I sold
That's a
covered
long
calls
time.
on it. But I mean, that's my thing is I don't take losses other than a damn penny stock, and that's why I don't play them, because they're trash, and you're gonna lose money if you play them, unless you're just playing with $100 or something. Then all right, whatever. But 10 years I've been holding these two. I let that penny stock go this year because I'm just so sick and tired of seeing it in the portfolio. But at least Barrick Gold jumped back up, and I was down. So I got 3,000 in that position. I was down 2,000 on it at one point. I was worried about them going out of business. They had issues with their mine down in Peru, the Lima plant, I think is what it's called, and they were having issues with Argentina. So it was on the border of Argentina and Peru, and they had locals on the Argentina side that were fighting them. So they had Peru working out, but Argentina wasn't. And the mine was literally right in the middle of both countries. Or I'm sorry, right at the border. So the whole entire mine was half here and half there. So at one point I thought they were going to go out of business because they can't even damn mine their largest mine. I don't know what happened to it. I don't know if they're still messing with it or not, but now I went from $2,000 loss to up 250, and now I'm down $200, which is totally fine. I'm not worried about it. It'll come back up, and next time it does, I'm out. I'm not, gold and silver is a pain in my ass.
I don't think I can hold any stock that long. I'm just gonna get depressed just by looking at
Bro,
it.
I wouldn't even hold my wife for 10 years. Penny stock. Holy shit.
I'm telling you, you learn a lot. You learn a lot of things from holding stuff like that.
That's cool that you're still trading. I mean, like, a lot of people would just give this shit up. Like, you know what? I'm out. I'm losing money. I'm not making any money.
Well,
that's the thing, man. That's perseverance right there, right? Like you heard it from me, you've heard it from Hostile, you've heard it from Mario, and all of us are experienced traders. Some of us less than us, some of us more than others. Hostile's been trading for 10 years. I've been trading for a couple. Mario's been trading for a couple. The fact of the matter is we all take losses. We all take, we take it on the chin. We bag hold, and you get stuck sometimes. It doesn't mean that you're not going to be profitable. Sometimes you got to hold things longer than you want. Doesn't mean that you're not going to make money. At the end of the day, if we could always be 100% correct 100% of the time, then there would be no need to even learn. You
That's
would
true.
just be able to do it.
That's the best thing I will say I learned in this Discord, like when to get out of the play. I used to
Sometimes you
backhold
just
a
gotta
lot.
cut.
Yeah. I was like, I'm okay with a small percentage of loss than just keep holding that money and just for a long time. I can make that money back with some other some other takers, but
This is why I don't believe in
to be
taking
honest,
losses.
I feel like I've been learning a lot. I've been doing this over a year now, but I think I learned more in last 2 months than I learned over a year.
I don't believe in taking losses because I know what it's like to hold for a decade. And I proved to myself that one of those holds turned out the way it needed to. The other one was just a bad choice from the get-go. At least the Barrick Gold that I got into, at least it was a profitable company, right? At least it was a company it was the largest miner, right? So at least that one, I made the right choice. Now the penny stock, it was just, I took somebody else's advice. I got into it, and I went heavy because I was like, if this goes to 50 cents or $1 and I got $5,000 in it, oh man, I'm gonna be rich. I had that stupid ass mindset, but I learned
Alrighty,
a
guys.
lot from it.
I'm gonna head out.
That's what I did with the Dogecoin after I made that
I was about to head out too.
1700. After I made that 1700 in a Dogecoin, I reinvested again and bought it on 6 cents, and it went down to 2 cents. Actually, today I came out of that play because it hit 57. I was like averaging it down. It got averaged down to 56, and I got on 57.
Good.
By the way, FaZe and Mario, y'all can't leave. Y'all have to stay.
I can stay. FaZe, it's what, 1 o'clock over there?
Yeah, bro.
Come on, really? That's all you got?
Who's doing the challenge, guys?
Mario's doing
Who's
the
doing
share
the new
challenge.
Mario?
Yeah, we'll make money in this one. Don't worry.
When are we gonna
Mario's
start?
doing a share
I'm
challenge.
just
He got
joking.
everybody into it with him.
Now
Alright,
we'll
guys,
make money.
you guys have a good night. I have work tomorrow morning.
Yeah, same with me.
Hey, good night, buddy.
Good night, bye.
All right, guys.
When is your challenge gonna start, Mario? And how much we need in the portfolio?
15,000, and we'll probably start in 2 Mondays from now.
Cool.
Hey, Mario.
Yeah, that would be possible.
What's up?
Hey, so your challenge obviously is 15K, but your plays, they're gonna be mostly, are they gonna be like your swings right now too, or are they gonna be day trades or?
All swing shares, most of them. I don't think I've ever scalped a share like shares before. I don't think I'd be interested in that.
Cool.
Yeah.
Thanks.
Get out of
Any
here, FaZe.
questions before I head out?
What's that?
Said
said
if
go
anyone
on
has
and-
any questions before I head out.
No, man. Thank you.
Go on and get out of here, FaZe. I know you got to get up early.
All right, guys. Nice talking to you. Yo. You have a good night.
All right, guys. Good night.
All right, Haas, I'll just talk tomorrow.
Mario, I'm down to talk to you for a little bit afterwards if you want, or unless you're trying to go to bed.
Well, I have the new schedule, remember? I have to wake up early now.
Gotcha. All right.
Yeah.
Talk later.
All righty, guys. Take care.
See y'all.